Mary Sherbetdjian here from Southern California Apartment Group. I am so excited. Soon you will be joining us at the Le Méridien Hotel for our Spring 2026 Landlords Lunch and Learn. Over 200 landlords in attendance. What a gorgeous day. I have to point out, last spring's seminar, it was pouring rain outside, and today this lovely sun. So I think we're off to a great start. This Landlord Lunch and Learn is off to a great start. My name is Mary, and I am from Southern California Apartment Group, Shant Sherbetdjian's office, who is your host of this afternoon. I think I spoke to everybody in this room while taking down your RSVPs or confirming them, and I meant it. Believe me that I am excited to meet you today. I see a lot of familiar faces, and I also do see a lot of new faces. So, my theme for this event is strength in numbers. We are a big room filled with landlords. We're about to break bread together. We're about to learn together. This means we're getting stronger together. And we need this more than ever in today's ever-changing landlord apartment ownership landscape. I mean, how are you guys keeping up? Because as a landlord, and I'm in the business every day, I have a very hard time keeping up. So I can't imagine you all. However, I want to share a story with you. This photo here, and this is what I mean by strength in numbers. This here was organized by our landlord attorney, who will be up here in a little bit. This is a picture. This was organized by busing a bunch of landlords from point A to point B, which was last November's city council member meeting. What you see here is about 85% of landlords sitting in that stand. Now, usually it's the other way around, right? It's tenants and tenant activist groups that are sitting there with their signs that say housing is a right? With their drums, making all kinds of noise, getting their voices heard. But not that day. That day was a bunch of landlords that showed up were able to also state their case and say why they're there, right? And I have to say that made a difference. Now, the motion did pass. However, the way it passed, it was moderate. So some of those concerns were taken into consideration. This is what I mean. We need to grow as a landlord community, and we need to be strong and well informed, because a well informed landlord is a successful landlord, aren't they? I've seen so many times sweet, innocent landlords that have buildings for years lose thousands of dollars because I don't want to call it a mistake. I want to call it an oversight. They didn't issue a notice the right way, or it wasn't written the right way. And there you go. You lost your eviction case and you still have to deal with a nightmare tenant. How is that fair? That's what we want to avoid. We want to avoid this. I want to be able to make sure that every single person in this room leaves here with some clarity. So, this is why we did this. We invited our 6 guest speakers back today. These individuals are professionals in every aspect of landlord ownership. Now is your time. Ask your questions. Take notes. Do not be afraid. Every single one of these individuals in this room is going through the same thing. We want to hear what you're going through. So, with that said, I am so excited because we're going to have a lot of fun in here. We're going to party. So, before we get into the program, I am going to go ahead and do some housekeeping rules. Each of you were provided with a lovely booklet, Spring 2026 Seminar. Inside this booklet is some great information. Keep it close by you. Use it as a doorstop, as a coffee table book, whatever. I love it. Make sure you have it by you. All of the guest speakers' information is in the back. You'll be able to find it. Okay. And with that, you were given some question cards. This is my favorite part. If you have a question, fill it out, hold it up. I will, along with my staff, come around and pick up your questions. We will ask, or I will ask directly to the panelists at the end your question. They're nameless, by the way. I don't care to see who is asking the question. I just want you to get your question answered. In addition, there's feedback surveys. We do this every spring and fall. I love to hear your feedback because every time I do bring it back, I want to make sure I do a good job. Next is your valet tickets. Those are validated, they're complimentary. On your way out, let them know that you were here for the Landlord's Lunch and Learn and it is taken care of for you. Okay? I do want to point out in the back, there is a in the back is some information here. So we do have our text hotline. I love this because a lot of our landlords utilize it. Some I have never even met before. If there is an information in here, or if there's a slide that you wanted to see or a copy, or you forgot about that one presenter's name, go ahead and shoot me a text. You will not get spammed. There is no auto replies. Most of the time, it's me that's behind this text hotline and or my staff, and sometimes even Shant. So, in addition, we do have a lovely QR code in the back. This is our YouTube channel. Now, before it used to be my mother in law that would only be watching these, but I have to say we do have quite a bit of a following now. All of what you see here today is being filmed, and a lot of these presentations will be on our YouTube channel. There's some great educational content up there. Every week we release one. I take you on tours. We go through units together. It's some pretty neat information. Go ahead and scan it. It'll take you right straight to our YouTube channel and hit subscribe button. I don't want you guys to miss anything. Okay, so before we get started, I'm going to invite your host of the afternoon here, Shant Sherbetdjian, up to stage. Please, a round of applause. Hello, Shant. Are you ready? Yeah.
What a woman. First and foremost, before we get started, I really want to thank my wife, Mary, for helping put this together. I don't know how she does it. She multitasks more than anyone that I know. She takes care of our house. She takes care of all our marketing at the office. She still finds time to donate as much time as she can to all the school activities for the kids. So, Mary, thank you for putting this together. It wouldn't have happened without you. Thank you. This is going to get me a lot of brownie points, by the way, so we're good. Secondly, I wanted to thank my staff, Hannah and Gaina. They're in the front. You probably got the booklets from them. They're one of the cornerstone points for putting all this together as well. So thank you to them as well. For those of you who don't know me, my name is Shant Sherbetdjian. I've been selling apartment buildings in Southern California for the better part of 20 years. I didn't have hair when I started. I still don't have hair. So I think that was gone early on. But I've done over 300 transactions, $500 million in sales. I've pretty much seen every problem and situation that can arise from owning, selling, just being around apartments. So over the years, we've put a panel together, and I really want to make sure that everyone understands the people speaking today are not paying to be here. I have personally invited them as pioneers in their craft to come over here and share their insight with us. I want you to understand and ask these people as many questions as you can. Get into their head. If you have questions about anything, these are the people to ask, including myself, hopefully. So, without any other ado, let's get this thing started. Mary, come back up here. Let's invite the first speaker and let's rock and roll. Let's do it. All right. Thank you guys for coming. I hope you enjoy it.
All right, to start this off, I'd like to introduce Javier Serna with Chase Commercial Banking. Now, Javier has over 15 years of banking experience and works closely with stabilized multifamily properties throughout Southern California. He is all things finance. Welcome, Javier.
Good morning, everyone. How's everyone doing today? All right. All right. We got a good crowd today. So, yes, I am with Chase Apartment Lending Group, specifically focusing on the Southern California region. have other regions across the country that we can lend to, but my bread and butter is here in SoCal, from San Diego all the way up to Santa Barbara, Ventura County, and further east to San Bernardino, Redlands area. So anywhere in between. But again, I'm based in Pasadena, so there's a specific focus around the San Gabriel Valley and, the outlying area. So with Chase Bank, if you're not familiar, we are the largest apartment lender in the nation, and we're able to leverage being the largest bank to provide you with apartment loans that are low in fees, that competitive rates, and a very easy, streamlined process. And what that means is, on the low fees, is that for most refinance, or for all refinances, with the exception of purchases, we pay for title, we pay for escrow. There's no charge for an appraisal. There's no legal fees. There's 0 points to originate. So all in, your average cost for a loan is about $2,500. Um, the next part, obviously, being able to leverage the bank, we're able to provide you a competitive interest rate. And then lastly, the streamlined process is, we don't ask for tax returns. We ask for W-2s, 1099s. It's literally, we're 95% of the approval process is based on the property itself. So we just want to see the profit and loss statements for the property and the rent roll, and we can typically get a deal done for you in about 30 to 35 days, assuming a very clean package. So we can work as quickly as you need us to, or we can work as slowly if you're waiting for a certain time period. So that's an overview of what we provide. I'd be happy to answer any questions. I'll be sitting in the back whenever you have time. So a lot of you guys probably have the question of where interest rates are going. If I had that answer for you, I wouldn't be here. I'd probably be on a yacht somewhere in the Caribbean. But the consensus along the market is that interest rates, and before I get into that, let me put an asterisk next to this and I'll provide an update after. But this was written about a week ago. Up until a week ago, we expected interest rates to remain relatively stable. All the inflation cues, things were kind of moderate, things were kind of just humming along, and we figured, again, the market consensus was that interest rates were going to hover around the high 5, low 6 rate environment. And that's, to be honest with you, that's kind of where we've been the last 3 years. We've caught dips where rates have gone maybe close to 5.5, sub 5.5, but that was a very small window, to also having interest rates up in the 6.5 range. So there is about a 100 basis point spread that we've seen over the last year. But for the most part, they've hovered in the high fives, low sixes. The asterisk that I want to put behind that is, obviously, 2 weeks ago, with the situation in the Middle East, that spooked the market, specifically with oil prices jumping about $40 a barrel. And depending on the day, we're going to continue going hard on the military action. And then there's other days where we say, well, things have gotten stabilized. We think there can be a resolution. So that moves the market a lot. So in the last 2 weeks, I think 2 weeks ago, I was probably quoting rates maybe in the 575 range, 580 range. And right now they're in the 610 range. And again, that's just has to do with a lot of volatility in the market, investor sentiment as to where inflation's going. And the reason behind that is, oil prices drive a lot of, I mean, they not only drive our cars, but they also drive the plastics, the imports, the exports. Even if we don't buy the oil, other countries buy that oil. We buy their products from those markets. We import them, and obviously we're going to see that increase in the cost of our goods and consumption. So with that being said, like I said, utilize me, leverage me as a resource. Always happy to have the conversation. Even if I can't help you, I'd like to put you in a position to where maybe I can provide a little bit more clarity during these times of turbulation here in the market. So looking forward to talking to you. Again, if you have any questions, I'll be in the back. Enjoy the rest of the presentation today. Thank you.
Thank you, Javier. So I'm going to continue the finance trend. We had Gianni Novo here as a speaker, but unfortunately he is not well. He fell sick. So we're going to have Devin Wash from his team, incredible Devin Wash, to join us. He is from CBRE Structured Debt and Finance Department, and he's going to touch up a little bit more about finance. Welcome, Devin.
Alrighty. How we all doing? So yeah, my partner Gianni couldn't be here today. Glad I got a chance to step in. My name is Devin Wash, and I'm part of CBRE's private client debt and structured finance team. A little bit about us: we focus on all asset classes, so not just multifamily, retail, office, industrial, all the major food groups. Um, we provide a wide range of financing solutions, not just your conventional perm debt, but we also do bridge, value add, construction, CMBS, agency, all of the above. Um, so with CBRE, one of our largest competitive advantages is our national platform. We get to leverage a ton of brokers across the country to get a lot of information. We keep tabs on hundreds of lenders, so we can provide the best financing solutions for landlords, investors, and give guidance where needed. Um, so a little bit about what we're seeing in the market today. From a macro perspective, we have seen a lot of this stress over the past couple years seem to subside. Seems like there are brighter days ahead, and we've definitely felt that to start the year. Um, a lot of challenging events that investors have had to work through over the past couple years, get through those by negotiating loan extensions, bringing new equity into deals, selling assets, just restructuring portfolios. It's been turbulent market, but we've seen investors weather the storm. So things have been on the up and up. On a micro level, challenges still exists with the changing environment. We're seeing things like rising insurance costs and operating expenses kind of throw deals out of whack, and rent control policies, all the tough things landlords have to deal with are still present in the market. So we're happy to be a resource for you guys to utilize and, help navigate through a lot of this murky water. One thing we've seen recently with investors, I think a positive is expectations have now started to align with market realities. I think we saw a bit of price discovery over the past couple years, and now it seems like valuations, pricing, and interest rates are now closer to equilibrium, yields a little bit more deal flow, and turns out positively for the investor side, interest rates in turn. Interest rates in general, Javier spoke a little bit about what he's seeing on the multifamily side. I'd echo that we're probably still in a 5% ish rate environment. Multifamily tends to be on the shorter end of that curve, followed by retail, industrial, and then office. Still seeing deals that are competitively priced mid to low 5% in certain cases, but I would say, 5.5, 6% is about where we're seeing most of the market. So if you have any specific questions on rates, happy to answer them in more detail. Um, One thing that we have seen with rates going, from what was 6, 7% a couple years ago to now the 5% range, it's allowing more deals to pencil. So transaction volume's up and, as a whole lends to better financing options for most people. One place that we've seen a lot of activity is in the owner user space. So it's a great opportunity right now for business owners to purchase the real estate that they're in. Big reason being financing options for owner operators can get up to 90%, which can't do in most cases for other asset classes and asset types. And pricing is usually among the most competitive in the market. So we're seeing a lot of owner user operator deals coming through the shop. Um, Capital availability is another quick thing I wanted to point to. I'm sure Javier can also attest this. No shortage of capital in the markets, which I think translates well to investors. Um, the primary bottleneck I think that we've seen over the past couple years has been due to low transaction volume, not so much the lack of lenders willing to put money out. So translate well for you guys, the lenders that are active in the market are all competing on a lot of the same deals, just given the short supply. And so that ends up being a positive for investors who are capitalizing on competing lender activity. So with that, want to finish. If anybody has any specific questions, deals, need market insights, or curious about how lenders underwrite or operate or what's available out there, please feel free to use us as a resource, even if it's early on. My team's happy to, happy to take a look at deals and provide market guidance where we can. Thank you. Specific question? Thanks. Somebody had a question? Oh, sure. Yeah, perfect. Thank you, guys.
I love it. We have questions, but we are going to have a fabulous, at the end, we're going to hold it out. All the questions are going to be answered. So you also have those question cards. Fill it out. I'll collect them. I'll also have an open mic too, where I pass the mic around and you'll be able to ask your questions directly to them. They're all going to come up here and join us in a minute after we're done. Okay. Thank you so much, Devin. So next we have our next speaker who many of us know and owners rely on. This is Gino Matuns from Safe Cal Insurance, and he's a very popular guy now, right? Welcome, Gino Matuns.
Clicker. Yeah. Hey everyone. First, I want to thank Shant and Sherbetdjian for putting this wonderful learning luncheon event together. It's really an honor to be a part of this amazing panel of speakers as well. I'm really glad to be part of this event. See a lot of familiar faces that I currently insure. I'm very happy to see everyone. And obviously, you guys will have some great questions at the end. Complete the forms, and then we'll have a Q&A session. I'm sure we'll get to answer all those. So I have a presentation today. I want to go over that. It's going to be a lot of boring insurance stuff, but just show of hands, I want to know who loves their insurance company or agent nowadays. Only my clients looks like they raised their hands. So yeah, it's not fun subject for sure. Let's see. So the apartment insurance. So what does apartment insurance cover? So apartment insurance is basically a business owner policy, just like any other businesses, except here we cover the property, anything attached or detached in the lot on the property, liability, and the income, rental income, in case something happens that the property's you're not able to, rent that unit out. So that's those are the main basically blocks of the coverage that we have on a policy. There's some other, better policies that have more coverages like equipment and breakdown and ordinance of law. But basically, this is what you have. And then there's extra coverages you can purchase, obviously earthquake, flood insurance, or, umbrella policy, all these things that, are part of an apartment landlord policy. So what are the typical claims that we see for apartment policies? Usually, things related to the property damage. That'll be fire, water, wind, and hail. These are the stuff that usually happens to the actual building. And then we have liability. Liability is more complicated. And number one claims we see on liability is slip and fall and habitability claims. So who's familiar here with habitability claims? Not a lot of people. So habitability is really a big popular lawsuit type of claim nowadays that comes in where tenant complains of the living conditions or discrimination issues and things like that the management of the property is not done in timely manner. So they're complaining that the conditions are not livable. So that could be wide range of complaints. But basically, if you have a regular policy that's a business owner policy for an apartment building, you either have habitability excluded, habitability is silent, or there's a specific sublimit for habitability. So if you don't have those three factors in your regular business owner policy, you need to, if there's an exclusion of habitability, you need to purchase a professional E&O policy for owner manager that covers things like discrimination, maintenance issues, any other professional services that you offer to the tenant. So that's very important. So some of the optional coverages, I think I already went over: flood, earthquake, umbrella, ordinance or law. So it's important to review your policy. So this last year has been much more steady, but just show of hands, how many of you guys got a non-renewal? Everyone got a non-renewal. So what happened with the non-renewal? So let's say you had State Farm, or you had Farmers or Mercury, any one of the carriers that's kind of living the space of and letting a big gap in the industry. So when they're living and you guys are getting non-renewals for many reasons, there could be they want to see update of plumbing, electrical, roof, HVAC, before they insure anything 1975 and older. So there's a lot of that happening now, but there's some carriers that left the state completely. They don't want to write any landlord, type of policies. So what happened is a lot of you guys got offers from non-admitted companies. So non-admitted companies is another complete, game change as far as what they cover. So non-admitted companies, you have to be a lot more careful. So I found this picture and I put this up. It's like an apartment owner trying to figure out what they do with the non-admitted insurance company. So what is a non-admitted policy? A lot of you guys, when I give you a proposal, you guys ask, what is this, an admitted company? Is this a California company? Where are they from? How do I know if they're covering their good company? So there's ways to find out financials, and claim history of the insurance companies. One of the best ways is AM Best rating. So AM Best is a rating bureau that oversees all of the carriers, not just California admitted carriers, and they give them a rating. So anything that's below A, you shouldn't be buying insurance from them. In matter of fact, my professional insurance policy for me will not cover if I make a mistake and sell you anything other than A. So that's how much attention you need to put on this specific thing. No carrier that's less than A as far as rating. And then try to find out claim reputation, obviously. And then number one thing for me is policy forms and the quality of the coverages. It's not like an admitted carrier. So you could pretty much say, let's say Mercury and Farmers, if you have a policy, they're very similar. But in non-admitted companies, let's say Westchester or WFKC, completely different policies. Same limits, same rental income coverage, same deductible, but are completely different as far as what they will cover and how they will cover. So it's very important to know and go review those non-admitted quotes. I see that a lot where a lot of clients make a mistake in purchasing a policy in just comparing rates, and that's the worst thing you can do. Just don't look at the rates only. Make sure you guys are looking at coverage forms and exclusions and endorsements. Make sure that's on your proposal as well. I've seen a lot of quotes that are just coverages presented by the insurance agent, doesn't highlight any of the exclusions, any of the endorsements. And I'm not sure how you're supposed to make an educated guess of what's covered if it's just, the premium only on the proposal. So you have to review all that stuff. One thing you can do on the non-renewals, obviously, if an insurance company sends you a list of things that you need to do to get a renewal, actually doing those things, but sometimes it's very expensive, especially like the electrical panel and plumbing issues. So there's some name brands that insurance companies will not accept, like Zinsco, Federal Pacific, Challenger. There's a list of them. But there's some good news coming up where some of the underwriters will only make you change the electrical panels if it's Zinsco or Federal Pacific. So some of the other ones like Stop Lock, Square D, and some of the other name brands like Bulldog, those are starting to kind of ease up on. They weren't really on any list of prohibited panels. So we're seeing some change on that. So there's good news on that section of the electrical panels. What you can do to get better rates as far as the insurance, maintenance is number one thing. Insurance companies look at the building's maintenance. We Google the address, satellite images, anything we can find, all your rental advertisements online. They'll pull up pictures of the interior that you posted whenever you guys were looking for a tenant. So they'll look at all this stuff. There's a lot of information out there. So make sure you guys are doing the same thing they would do. Just Google your own address, see what they're seeing. If there's anything there you don't want, try to delete it. Because this is stuff that, let's say it's, there's an old picture of a kitchen and you did the update. So why is that picture still out there? Try to remove that listing or update the photo. These are all these things that we pay attention, and everyone looks at those details before they actually present you with a quote. Not the average companies, but the good ones will always look at those stuff before they present a quote. So pretty much that's it for my presentation. If you guys have any questions, definitely write those questions and I will get to them at the Q&A session. Have a good one. Thank you.
Thank you, Gino. Yeah, about those question cards, feel free to hold them up. My staff will come around and collect them, and I will fire those off to the panelists towards the end, and we'd love to hear the answers. Oh, yeah, he's tall, huh? All right, before we get into the next speaker, I want to share a personal story with you guys. He was talking about maintenance issues, he was talking about habitability claims, and I got 2 tenants at 2 different apartment buildings send me this picture. Look at that. It looks like attorneys are running out of people to sue, right? So they're directly advertising to tenants. And there's 2 different apartment buildings in 2 different cities. One was in Van Nuys and the other one was in Montebello. They both texted me this, they're loyal tenants. And then certainly I said, oh, haha, you can toss that. But it got me thinking. All it takes is one disgruntled tenant, for whatever reason he's upset, to get a flyer like that and look at it. And some of the things that are listed on there are like plumbing leaks, or do you have issues with cracked paint? And if you look at the settlement amount, 100,000, 75,000 they've got listed. And I'm going, man, a lot of people who own buildings in LA, they're older, and certainly you do have sometimes maintenance issues like this. And so I decided, all it takes is one just disgruntled tenant to do this and go to an attorney, try to sue you. Now, a lot of times it may be frivolous, and I don't see anybody in here being a slumlord, but how long and how much is it going to take you to fight this off? It's not so much, you winning or losing, but how much money is it going to take for you to fight this off? So I said, you know what? I'm curious. How many people in here actually inspect your units? Do you go into your tenants and how often? How often? Actually, how many of you inspect units? Okay. Would you say you guys inspect them annually? Okay. I decided to incorporate annual inspections now going into my units. I didn't I'm being honest. I'm being an honest landlord. I did not go into any of my tenants' units. I haven't been in there for years. I wait until they text me or call me and say there's an issue, and then I walk in. And then I go, oh, look, they painted the walls. Ha, I didn't know. So once I got this, I said, you know what? In today's climate, I need to switch this up. Even though my tenants are loyal, I need to figure out a way where I can document something, because all it takes is just, like I said, one tenant to just be upset, and there you go. You go down the rabbit hole. So I started incorporating what's called annual smoke detector and carbon monoxide detector inspections. Right? Something simple. I don't want to know what's going on in your unit. I'm just going to walk in with my maintenance team. His name is Raphael, and we're just going to check to make sure all the smoke detectors inside your unit is working. So I issued them, and I'm incorporating this now once a year in February. I issued them a 24-hour notice, and I said, tenant unit 201, I'll be there on this time between the hours of 9 to 12 to inspect your unit. Here's my notice. And with my notice, I decided to take it to a next step. I want them to also document, or I want to document the fact that I did check these smoke detectors and they were working. So what I did was I also included what's called a tenant maintenance request form. Now, on this form, it's pretty simple. I put a happy little emoji that has a friendly little maintenance guy holding up a wrench, that I'm here to help you, right? And on this tenant maintenance request form, it doesn't look threatening at all. It just basically says, hey, I'm going to be here at this time. If there's something else that you want me to look at in your unit, let me know. Whether it's a broken screen, whether it's I don't know, some cracked thing where you have a leaky faucet. When they get this, they'll say, oh yeah, I forgot to tell you about this one thing. I don't want you to think, oh my gosh, this could be a double-edged sword. They're going to start listing all these things. I don't want you to think that. But if they do list all these things, now you are ahead of it, right? You're going to tackle this on one by one. Before it becomes a problem, you're able to go ahead and take care of it. So most of my tenants filled it out, and it was very minimal. One was a toilet paper holder that broke off. The other one had a broken screen that we fixed. Small little things that we were able to do on the spot while we checked their smoke detectors. Everything turned out okay, but I have their signature on file. It shows that on February 2026, I came in and you asked me, and I asked you if there's anything else in your unit that you want me to take a look at. You said yes or you said no, and you signed, and I filed it away. So I plan on doing this once every year. This, to me, made me feel better. I was like, okay, I will scan this, put it in the file, and now I can sleep well at night, because if something like that letter shows up at someone's door, I don't want them to get any bright ideas. And if an attorney decides to knock on my door and be like, hey, no, I've got some letters here. I've been inspecting these units. He hasn't mentioned once to me about this mold issue or this possible moisture in his room. So that is my personal story. I hope maybe you can incorporate something like this, or if you find it valuable. If you want a copy of my inspection notice, or if you want a copy of my maintenance request form, go ahead and text the hotline. I'd be happy to share it with you. Take it and make it your own, and start incorporating these annual inspections. Go in and check their smoke detectors. It's a good way to be able to say, hello, I'm here for you, tenant. Whatever you need, let me know. So there you go. Now, before we get into our next speaker, his name is Kirk. Kirk is all things management. We've been working for Kirk Veliquin for a long time. He is the guy I call on speed dial. Now, surely I do manage my own apartment buildings, but I call him often asking him, so maybe he should start charging me. Kirk, please come on up. Let's talk about management.
Thank you, Mary. Good morning. Welcome, everyone. Thank you for coming. I'd like to also extend a special thanks to Mary, Shant, the whole crew for putting this all together. I know it's not easy. They do it every spring and fall, and I just can't imagine what goes on in that office. My name is Kirk Veliquin. I started in the real estate business in 2007. I started working for RE/MAX, where I worked alongside
my mentors, learning the ins and outs of commercial real estate, specializing in multifamily and commercial properties. For the next 5 years, I just did sales, learning everything I could about the business, and what I call made a perfect mistake. I showed a client of mine some buildings I was managing for family, and he wanted to know who was managing that building. And I was reluctant to tell him that it was me because I wasn't in the management business at the time. And his wife and him kept pressing me, and I admitted that it was me. And he had wanted me to. They both wanted me to go ahead and take over management of their properties. And I told him that I wasn't in the management business. I only did sales. And he started listing a whole bunch of problems he was having with management. And I just said, I don't do that. So him and his wife persisted for the next year until I said, okay, I'll take it on. And as I started doing management from that point forward, I was still doing sales, but as I started accumulating clients, I was getting the same. I realized how much owners dislikes maybe a soft word, hated their management companies. Um, and I just realized that I needed to take a different approach. So I chose the approach of uh, more of an owner relationship where I would treat the properties like they were my own and communicate more often. And just, you know, something I learned where when you work for family, you learn that you got to be really open, straight, and it's really difficult to work for family, but that's where I learned that. So, with that being said, I want to go over a few of the pros and cons that I've heard throughout my career. And these are the ones that I've heard the most, so that's why I've chose those. Um, Loss of control. A lot of my clients are what they call self-managed clients, and the first thing is they feel very uneasy when they hand over their baby that they've been managing for years. The second is communication issues. A lot of owners tell me that I'm a number when I go to a management company. They never return emails or calls. So that was one of the other big ones. And then the last one is, unfortunately, it's an added expense. But if you have the right management company, it's not that much of an expense. Pros. So the biggest thing now in today's world is legal and insurance compliance. We, I have a dedicated person just looking at all the different changes going on in the state, city, county. And now we work with Gino, so we know a lot of the insurance, what they expect. So we try to get ahead of all that. Time saving, we collect all the rents. We do the tenant inspections. We do property walkthroughs, maintenance, preventive maintenance, and even document all the work orders. As Mary was saying earlier, we do it on a platform that records when the tenant wants to do a work order. They'll submit it with a picture, with the description, and that way we have captured their request. And then when we take care of that issue and resolve it, we also upload a picture of it being repaired and some notes. Um, Also, we do tenant screening, which if you put bad tenants in, you're going to have problems your whole time. And again, preventative maintenance, vacancies, we attempt to get those things quickly turned. And the financial reports, a lot of my clients tell me that the reports that we provide them is very simple and easy for their CPAs to do their taxes. So those are some of the pros and cons that I've heard from clients throughout the years that I've been doing this. Since 2011 is when I actually started doing property management. Again, thank you for coming, and I look forward to questions at the end of this. Thank you.
All right. Thank you, Kirk. So, our next speaker is someone many of you already know. Shant Sherbetdjian is the president of Southern California Apartment Group and senior vice president of Remax Commercial Investment Realty. With over $500 million in apartment transactions and nearly 300 deals closed, please help me welcome Shant Sherbetdjian.
My wife always makes me blush, so all right. First thing I want to do is put a little bit of attention into the booklet that was passed out when you all walked in. Okay, on the fourth or fifth page in that booklet, once you open it up, there's a very valuable resource depending on the cities that you own in. This is a rent control caps per city summary chart. This was just recently updated. This shows for all these different cities what you can raise the rents. And then also right next to it, there's a footnote that is the source of where we compiled the data from. But the smallest mistake on a rent increase could be very costly. So for instance, Baldwin Park just went down from 3.9 to 3% beginning of January. I hadn't heard anything about it until we started researching it. So a lot of these things, they happen silently. You have to go and contact the city and find that information. So please feel free to use it as much as you want and call in and verify it before you actually issue it, or you could call us and we can double verify it for you if it's in a few months from now. Okay, so this is the third seminar that we've had in the last 13 months or so. And typically my talking points when I come up here, we talk about stress of the market, what people are dealing with on a day-to-day basis. I mean, I've heard so much of that in the last 2 or 3 years. I'm sure all of you are, up to your eyeballs, always listening to talk about SB 721. All of a sudden now we have to put refrigerators inside units, and all of the units have to have stoves. The SB 721 is actually pretty important. Now, and it's interesting because a lot of people don't have this inspection report done. But if you go to get a loan, if you go to Chase and you want to get a loan, you need to provide that report to them if you have any elevated elements above 6 feet. You cannot get a loan right now with Chase if you have a balcony or a stairway, if you don't have that SB 721 report. So these are things they just got implemented very, very recently. So it's just another layer of something that we deal with. In reference to this new refrigerator law that passed, we have a building that we're selling. It's a 16-unit property. 2 of the units are being delivered vacant. The buyer contacted us last week and said, make sure that the owner doesn't put cheap fridges inside the units. We want some nice ones in there. I think the owner wasn't even planning on putting any refrigerators inside the unit. We went under contract on this deal prior to the end of last year, but since we're closing in 2026, now he's going to be obligated to put refrigerators in that unit to comply with the laws per renting a vacant unit. So I had to talk him out of putting mini fridges inside them. So that was a little bit of an issue. Okay, so what I want to talk about are questions that I get called on. People ask me, what are the current cap rates? What are the current price per units in the area? How are people buying deals? Who's buying deals? Really, what's happening out there? So we started to look up random deals and try to figure out what's happening with them. But I said, you know what? Rather than just look up random deals, I'm going to talk about deals that I know inside out. So since the beginning of the year, we've closed 10 different apartment complexes. So we have 10 deals closed since January 1, 2026. And I have another 3 deals in escrow that are non-contingent that are closing in the next 10 to 14 days. There's a 4th one, but that one's being held together with dental floss. So I don't really have that much confidence in that one closing. But when we look at the data here, the data speaks volumes. On the lower end, we have a price per unit on a 32-unit building we sold in Boyle Heights, $87,000 a door. 20s construction, old school, rent control building, 7.15 cap. And we're seeing sub 100 a door prices on that type of product. I think the multiplier was around a little bit over 8 GRM. On the high end, we have a deal in escrow that's closing next Friday in the city of Rosemead for $2,930,000 for 5 units. Just under 600 a door. These figures go everywhere. There is no price per unit formula where people say this is what your building is worth price per door, or this is the cap rate that buildings sell for. If we look here on this chart, the cap rate that we have on the lower end of the spectrum is 4.0%. This was for a value add deal that we just closed at $326 a unit in Alhambra off of Main and Garfield. Really nice area on a street called Beacon. But it was a 4 cap from a very qualified buyer that's owned multiple buildings. They got a loan from Cathay Bank. They got the deal done. But on the lower end, that's the 4 cap. We have another deal closing next week in Huntington Park for a small 6 unit, and that's a 7.5 cap. So the cap rates are varying all throughout. Another notable deal was a 20 unit that we sold in Whittier, $292 a unit. That's a big number. $292 a unit for an early 70s building. That one sold at slightly over 5% cap rate. So we look at these deals, there's no real formula where you could kind of, off the cuff say, oh yeah, your building, where is it? That's $250 a door. It's $300 a door. There's so many things that go into play on each particular building. The location. I've sold buildings where you're in a fantastic location, but around the corner, it looks like South Central. That gap in one block makes a big difference on the sales price. So all those things are taking into account the characteristics of the property. Now, the most interesting component, and I didn't even realize this until I started putting this chart together. So from these 13 deals, 11 of these buildings were listings of mine. 2 of them I represented only the buyers. From the 13 deals, 9 of them were all cash. It's insane. I've never seen those type of metrics in my life. Before, I would say over the last 20 years, less than 20% of the deals we sold were cash. And even another more interesting component, the ones that were all cash, you say, okay, these were, very savvy buyers that bought the building. The 2 highest sales in here are a 20 unit in Whittier that we sold at $5,850,000. And then another 16 unit that we have closing in the San Gabriel Valley next week at a hair under $5.4 million. 5.8 and 5.4 million. Both of those first-time buyers, they've never bought an apartment building ever in their life. They owe 0 experience. I don't even know what to make of it. Those are some very questionable metrics. So, I mean, it's good. There looks like there's a large amount of capital coming into the market. But fundamentally, I'm sitting there, we're brokering these deals. And, obviously we see an offer come in. It's a cash offer. We get really excited on it. And the first thing we do is question it. But we're able to get these offers to the finish line and, we're closing them. So it's interesting. I mean, I hope everyone just keeps buying all cash. It makes our lives much easier. So I think we get spoiled when we see those. But on a side note, I wanted to just share one quick thing with an experience I had with Javier. We had a 10-unit building that closed in Pasadena just recently, the beginning of January. I gave him a complete package. It was before Christmas and maybe 2 weeks before Christmas. And if you remember, Christmas and New Year's, they both ended up in the middle of the week. He closed that deal from when we gave him the rent roll and the P&L to recording, 22 days. And that was between Christmas and New Year's. So that's insane. So my hat's off to Javier. That's a very big feat. So when we look at all this, what do you make out of it? The market still has a lot of activity, but we are seeing a lot of people getting out, which leads me to the next slide. What did these people do when they sold their buildings? Some of them have stepped up in basis, some of them didn't. 10 people, 10 out of the 13 cashed out. They paid the taxes. I don't think it's pretty, but they did it. They wanted nothing to do anymore with their apartment. So 10 were completely out. One of them went into a DST, a Delaware Statutory Trust, and 2 of the people got into different product types. One of them got into an industrial property, and then the other one a triple net in the East Coast. So this is what is happening right now. This isn't a chart that someone put together that is not in the trenches. I personally were involved in all of these deals. I know these deals upside down, and that's really the pulse of the market. So I wanted to make sure that I shared with you what I'm seeing out there. Buildings are being sold, but it's just interesting. There's a lot of cash coming through. One of the buyers that we had that picked up a 30-unit building that we closed on in the San Gabriel Valley, they own a ton of units. His portfolio consists of 22,000 units. A lot. Ton of buildings. I've been after them to buy something, I mean, since I started selling buildings 20 years ago. He's back in the market. He's buying right now. This guy hasn't bought anything for 20 years. He wouldn't even be interested to look at a building. But now they're buying. They just bought a building from me in San Gabriel Valley. They're buying other ones as well. So, there is some speculation that a lot of the large companies are coming in and trying to nudge their way into the mom and pop market. And, all I could say is you really have to pick the position that you want. If you're going to stay in this game, you have to have the knowledge and you have to be ahead of the curve. So that's pretty much my 2 cents with everything. So I just wanted to share all that with you. We'll get back to programming. Where's my wife, Mary? All right. Thank you, guys.
Fantastic. Guys, I have to say, I got a lot of text messages from requesting my maintenance request form, and I'm so excited about that. So I will send those off to you. I do want to share one more thing. Because those things came through, I do have my YouTube video about me going through the units that I went through, issuing them the notice, along with issuing them the tenants maintenance request forms. Feel free to scan it. I take you along the ride. Again, if you want a copy of my information, I'd be happy to go ahead and send it to you. I did get your text messages. As soon as I get into the office, I will send you a copy. I'm really excited about that. Now, one of the things that's going to help you with your maintenance requests is, I'm sure, some money towards it. So I've got one lucky table in here that's going to win Home Depot gift cards. You guys are going to walk away with some Home Depot gift cards. If I can have someone help me choose one number in here, anyone, can I get you to choose? Guys, before you leave, please go to Shant and say, where's my Home Depot gift card? Okay, so everybody on this table is going to walk away with one. Table number 12. Woo! Congrats, guys. Exciting. Now, maybe you can use that to apply towards your tenant maintenance requests. Amazing. All right. Now, I am ready to introduce my next guest, which is Dennis from CoStar. Now, he's all about the numbers, who will be sharing valuable insights into today's apartment market. CoStar is one of the leading commercial real estate data platforms. So, Dennis, please come on up. We're ready for you. Cheers.
Let's see. Hello, everybody. My name is Dennis Lee, and this is my friend Jared Wick. We both work at CoStar Group, and I've been with CoStar for about 4 years. So, in order to be prepared for this meeting, I called my friend Jazz yesterday. So, he was a college roommate of mine, And we graduated UC Irvine about 20 years ago. So I told him I'm going to be speaking in front of 200 multifamily owners. So giving you a little bit of background, 20 years ago, he didn't care about getting A's in college. He didn't even care about getting B's in college. He just wanted to get C's in college and that's it. He just wanted to graduate. And one day he came to me and said, Dennis, towards the end of the year, he was like, Dennis, I only trust you to help me out with some shipments. Can you please help me out? I was like, sure, Jazz, I'll help you out with some shipments. In my head, I was thinking, okay, maybe about 15, 30 shipments. That's it. Help him out. So he takes me to his place the next day at the storage locker. It was about the size of my dorm room. And I was like, wow, this is crazy. He was selling memory cards at the time that were going for $30 to $128, and he had over 1,000 of them. He was making thousands of dollars a day in college. That was crazy to me. So that day, we sent out 200 shipments. And then fast forward about 4 years later, he called me up and said, Dennis, I am so frustrated. I want to buy multifamily properties and I cannot find it. Nobody's returning my calls. I can't find a good deal on LootNet. What do I do? So I helped him out. I showed him CoStar and we were able to find properties for him. He was finally happy. So today when I talked to, or yesterday when I talked to him, he owns 200 multifamily units in Los Angeles, and he's working on a deal to close 500 units. So with CoStar data, understanding the market, now he's able to work with professional real estate agents like Shant. People will actually take his calls now. So the goal today is to go over what's happening in multifamily in Los Angeles. So let's get started. So multifamily vacancy is elevated due to both weak demands and inventory. So in the red, it's going to show the net deliveries. So in the past, there were a lot of buildings that were under construction and delivered. However, now because of construction costs, it's getting more expensive. There's less deliveries. But during those high times where they're delivering a lot of buildings, there was too much inventory. So the vacancy rate in the United States was about 8.5%. And in Los Angeles, it was about 5.7%. So Los Angeles is actually doing pretty well compared to the United States. So in Los Angeles, it's about 5.7% vacancy. In San Jose, it's about 4.6% vacancy. And then places like Houston is 12.2%, Dallas, 12%. So, which are also the focus of most developers. So a lot of the developers in the past focused more on the 4 and 5-star buildings. Those are going to be the buildings that have really great amenities, swimming pools, gyms. Recently, though, they've also been doing 3-star buildings. And the reason why in the past they did 4 and 5-star buildings, they could charge higher rents. It's more profitable. So for developers, it made total sense. Construction has definitely tapered off recently. So you can see in 2024, 2025, barely any construction compared to the past. Construction has definitely went down quite a bit. So 2025, 2026, there weren't that many that were under construction. So 2024, we had about 22,000 units under construction. 2025, about only 17,000 units. Rent growth has also flattened out. So generally, in the yellow is going to be the average rent for the United States is about $1,750. Los Angeles average asking rent is about $2,322. And it's only going up about 1% per year. So going up really, really slowly at the moment. And then this is what's happening in the LA market, which is the most expensive submarkets. Santa Monica, they're getting about $3,400 per unit. In Beverly Hills, about $3,300 per unit. And then Westlake, $1,600 per unit. And then Antelope Valley, about $1,800 per unit. So where are the vacancies at? Well, downtown LA is leading the pack at 10%. Downtown LA, both Jared and I had offices there, and for the CoStar group, we were at downtown LA. And basically, there's a lot of issues there. A lot of the offices are leaving downtown LA. So, for example, CoStar, we're going to go to Long Beach, Century City, and then also Glendale. We're getting out of downtown LA because of the homelessness. It felt like very unsafe in downtown LA. And then in Pasadena, vacancy rate's pretty low. It's only 4%. Glendale, about 4.6%. So where are they building these buildings at the moment? Well, Koreatown, they're building about 2,400 units. San Gabriel Valley, about 1,100 units. And there's also some big deliveries. Why this is important to you is some of you might have multifamily buildings in Burbank. So they just completed a 573 unit developments, August of 2025 in Burbank. Also, the transaction volume is recovering after bottoming out in 2023. So Devin and I were talking from CBRE, and he was noticing the same exact thing. Back in 2023, there was a huge gap between sellers and buyers as far as pricing. So there weren't that many transactions that were happening. Now, buyers and sellers are kind of like decreasing the gap. They're understanding, okay, things are not going to change much. Now they're starting to buy and sell. So average per unit in Los Angeles is about 353 per unit right now. Here's an interesting fact. So back in 2024, there were a lot of institutional investors that were buying multifamily properties. Now, in 2025 and 2026, there are not as many institutional investors. They're looking at other asset types like retail. So what I did was I did a little project last night, and I used CoStar to track multifamily units in Los Angeles. So I looked at multifamily data from 5 units and 20 units. So I was able to track 12,776 multifamily units in CoStar. And what I saw was in this group, there were about 163 properties that were for sale. And then there were 52 properties that were only on CoStar and nowhere else. So this is one of my things that I showed Jazz. We were able to show properties that were only on CoStar and not on LoopNet. And then he set up alerts to see, okay, anytime that there's a property for sale, I'm going to be the first to know about it. And then that's when he's going to reach out to someone like Shant because he has all the knowledge and say, I want to buy this property. So here's a quick snapshot of the multifamily space in Los Angeles between 5 and 5 and 50 units. So average rent per unit is about $1,800. And it also, like Sean was saying, it depends on location. Sometimes even a block away makes a huge difference. So if you need help for a specific city or a specific block, Jared and I can help you out. Other important things is it's taking about 3.8 months in order to sell a multifamily unit at this time. And then as far as like market effective rents, for a 3-bedroom, it's about $3,500. For a 2-bedroom, it's about $2,700. 1-bedroom, about $1,900. So here's where I'm going to let Jared speak.
Dennis, great information. Thank you. Nice to meet everyone here. So what we're looking at on the slide now is, as investors, we care about things like occupancy. We care about historical rents. We care about what asking rents look like and forecasts, rent growth. And so what I'm looking at here is a sub-market view of what we call the Tri-City area. And Dennis pointed out that it's actually Pasadena. And what I'm looking at here, I'm segmenting, maybe you're having a problem renting your 2 bedrooms, or how do I want to price my 2 bedrooms? Or what does that compare in the submarket. And so what I'm looking at is historical information on a 2-bedroom unit here with annual performance. Next slide. And some of the things we do as well is property management. So when we're trying to understand markets, we're also trying to analyze who manages properties and how is their performance. So we're looking at performance in the Tri-City area for 10 of the top property management firms in this specific area.
And I got the rest.
Oh, good.
All right, cool. So kind of like how Sean went through rent comps, we're going to look at rent comps in Los Angeles for the last year. And we're looking between 20 and 50 units. So in Baldwin Park, there was a multifamily property that sold for $23 million, $385 per square foot. And then there's another one in Pasadena on 820 South Raymond, or North Raymond, sorry, sold for $12,900,000 at a 5.94% cap. So this is one of the things Jazz uses when he puts in an offer to make sure that he can look at sales comps in the area. So here are the key takeaways. There's a weak demand and oversupply has elevated vacancy levels. New construction is dwindling after a decade of record deliveries, which will eventually compress vacancies. And then, important to you as landlords, landlord pricing power has diminished, resulting in minimal or negative rent growth. So if you want these slides or if you have any questions, feel free to talk to Jared and I. And then we also, here's my information. If you need the deck or have any questions, it's right up there. You could go ahead and email me. And you could also ask Sean for help. And just wanted to really, really thank Shant and Mary and your team for hosting this wonderful event. It feels like a landlord wedding, so really appreciate it. Thank you.
All right, a landlord wedding. Hey, Dennis, you're on to something there. Maybe for our next event, you guys. I'll bring a DJ, dance floor. We'll really party in here. Awesome. Next, we have Greg Burns, Senior Vice President with Investment Property Exchange Services, also known as IPX 1031. Greg, you specialize in 1031 exchanges, and he's helped thousands of investors structure exchange transactions, a lot of our clients as well. Welcome, Greg.
Well, I was gonna thank Sean, and then I saw that only 3 of his 13 deals were exchanges, so we're gonna have to work on your exchange pitch there. So I have worked for IPX, which is a qualified intermediary for 27 years, which makes me feel kind of old. 1031, for those of you that don't know, is just a section of the tax code which allows someone that owns property they've held for investment or business use to sell that asset, exchange it for another property that they intend to hold for investment or business use, with the ultimate goal of deferring the payment of capital gains taxes. So it's a way that you can move between real estate investments without having to pay taxes every time. You know, it's interesting. If you look at kind of the basic definition of an exchange, it doesn't say real estate held for investment or business use. It says property held for investment or business use. And so for the first part of my career, up until 2017, I exchanged all kinds of things. So I used to do personal property exchanges. So I've exchanged livestock, I've exchanged farming equipment, I exchanged a racehorse, I exchanged artwork. In fact, I exchanged a woolly mammoth skull one time. In fact, the running joke in my office that I had figured out how to exchange everything with the exception of husbands and wives. And then someone told me there was a website for that. I just took their word for it. So some of the reasons why people obviously do exchanges to save on capital gains taxes. We see a lot of people going into assets where they're going to reduce management responsibilities. You know, they talk about the getting away from the terrible T's of real estate, right? The tenants, the toilets, the taxes, the termites, all the fun things that are associated with managing assets. Increasing cash flow. Estate planning has been a big part lately. We're seeing a lot of clients that are 1031 exchanging into assets where their kids are living in it. They are in a position where in their life where they're saying, hey, you know what? Real estate has got really expensive. My kids, even though they're real estate professionals, they can't afford to buy a house. I own these investment properties, so I'm going to sell one. I'm going to 1031 exchange it, and I'm going to go buy a house that my son or daughter is going to be my tenant. And then ultimately, when I'm gone, I'll heir that property to one of my kids. And we're seeing them do that in various ways. The rules say you can rent to a family member as long as that family member pays fair market rent. So that's, one of the things that we're seeing people do right now. Like-kind property is an interesting thing. So when they talk about like-kind exchanges, people have a lot of questions. In fact, today I spoke to an owner who came up to me and said, hey, can I sell my multi-unit property and go buy 2 houses? Well, the like-kind rules for personal property, which I talked about kind of exchanging earlier, were very restrictive. But the like-kind rules for real estate are very broad, which means that is it real estate? And am I holding it for investment or business use? And what am I buying? Is that real estate? And am I holding it for investment or business use? The actual asset class doesn't matter. And it's kind of a misnomer because I've had, many calls with clients over the years. I had a call one time where a client owned some vacant land. They wanted to sell that property, or they're in the process of selling it, and they wanted to exchange for improved property. They wanted to go buy, a house in Shell Beach, and their uh, CPA told them you can't do that. That's not like kind. You cannot sell vacant land and buy improved property. You have to buy more vacant land. Well, that's not true. I had another client one time that was selling their land and their business. So they owned an industrial building where they build widgets. They were selling their business. They were also selling the land and the building to this new buyer. Their CPA told them you can't exchange your business because the land and the building, because you never paid yourself rent. Well, it's clearly a business use property. They did not live there. There's also nothing in the tax code which says a property has to produce income in order for it to qualify for an exchange. The rules say that I've got to hold it as an investment. So we do see clients that are also exchanging for, what's going to be ultimately a second home, or maybe their dream home where they're going to retire. And they have to hold that asset for at least 2 years as an investment. So we see clients selling properties here, doing 1031 exchanges, buying a property in a place where they're ultimately going to retire. The question always comes up, well, how long do I have to hold it as an investment? And there's a revenue procedure out there that says any property that's been held for 2 years as an investment, in an audit, the IRS can't challenge the held for investment portion of the exchange. So as long as you hold that asset for at least 2 years, after that, you can kind of do whatever you want with it. So anytime you're thinking 1031, asset classes don't really matter. We are seeing a lot of clients diversify right now, where they're selling properties and exchanging into multiple asset classes. A big market that you're going to hear about next are Delaware statutory trusts, which allow people to exchange into, a lot of time, multiple assets, multiple geographic locations, get some diversity that way. We're seeing also net lease investments, a big segment of the market. I would say probably 15% of all of the apartment deals I do are people that are exchanging from apartments into some sort of net lease or passive types of investment. It's really kind of interesting. When I first started 27 years ago, I didn't know anybody, but let's say 25 years ago, I knew one person in Encino that sold net lease investments, and they sold them only to basically institutional buyers. Today, I know more than 400 real estate professionals that specialize in only that asset class. It's become a huge segment of the market. And, it's not without risk, right? It's real estate. Like I was talking to somebody about Starbucks the other day. They were selling their Starbucks. And one of the trends that you notice with new Starbucks are they all have drive-throughs, right? So if I own a Starbucks, it doesn't have a drive-through, and all of a sudden I notice that Starbucks starts building new Starbucks in the area right around my store that have drive-throughs, I might be in a little trouble, right? There was a Starbucks in I live in Monrovia in the local Vaughn's shopping center. That Starbucks went away. when they built some new ones down the street that had drive-throughs. So, they're not completely bulletproof, but they are an interesting form of investment. I want to talk a little bit, I kind of finish up on reverse exchanges. So in a regular 1031 exchange, you sell your property, you take those proceeds and you use it to go buy another property. Shant was talking about earlier about the number of deals that he was doing that were all cash. And it's kind of an interesting deal. There's a lot of money sitting on the sidelines right now. So we're doing about 150 reverse exchanges per month. That is more than double the amount of reverse exchanges that we were doing in 2021 when we were literally doing video game numbers. We were doing, 6,000 exchanges per month as a company across the country. And I think that the reason that we're doing a lot of reverses is because people are finding assets that they want to buy and they haven't even put their property on the market yet. And they know that, hey, I've got to make an offer, a strong offer on this property and get it under contract, and I'm going to probably have to close on it before I sell my asset. So one of the challenging things about doing a reverse exchange is what? Got to have the capital available, right? I haven't sold my property yet, so I got to have the money available to be able to buy this property. And so if you have the capital available, reverse exchanges are a great tool to use. Most of the publicly traded companies that we do business with, or the large real estate companies that we do business with, almost only do reverse exchanges. And the reason is so I have a company that's an office REIT. They buy his office building and they've got another one that they want to sell. And they go, hey, we're buying this office as part of a reverse exchange. It gives us 180 days to get that property sold. But even if we can't sell that other property in 180 days, we still want this property. And so they're never in a position where they're stuck paying taxes. And so that's the nice thing about reverse exchange. It allows you to basically buy what you want before you sell what you have. They are definitely more complex transactions from our standpoint. It requires us to form an LLC and actually hold title as a straw buyer for the client during that exchange period, but they're an approved, procedure by the IRS. There's no additional risk by doing a reverse exchange that you would normally have. So, our clients feel very comfortable moving forward with those. So I want to thank you guys for having me here. Is Mary around? Oh, there she is over there. She's hiding from me. I appreciate you guys having me out, and I look forward to answering any questions you have.
Yes, great. Thank you. And yes, speaking of answering any questions, you guys have the questions cards are coming in and a lot of great questions. So definitely, if you don't have a question, I would want you to stay for the Q&A because it's really nice to be able to hear what other landlords are going through and what, their issues are and what their answers are. Now, I'd like to introduce our next speaker. It was Louis Goros, but Louis also fell sick, and we are having the stand-in Stephen Adams. Stephen Adams is with Kingsborn Real Estate, who is also very fabulous. Stephen works with investors exploring structured real estate investment opportunities, including Delaware Statutory Trust investments often used in conjunction with 1031 exchanges. Come on up, Stephen. Yes.
Good afternoon, everyone. My name is Steve Adams from Kingsborn Real Estate Capital. And Shant, Mary, I want to thank you for having me here today. Every time, this is the second time I've spoke here, and I seem to learn something new every time. So hopefully you guys could learn something new about DSTs and the Delaware Statutory Trust. Okay, so this is what we're going to cover. Thank you. This is what we're going to cover today. I only have 10 minutes, so I want to give you guys enough information so that you understand what a DST is, and if you could see if it's a viable investment opportunity for you. I don't expect you to understand everything, but I'll make sure that you have my contact information so that you could reach out to me directly, and we could speak further about our offerings and our program. So this is just information about Kingsborn. Kingsborn's been doing real estate syndications for the past 35 years. We've never lost a single investor dollar, and we've never broken even on the sale of one of our DSTs. So we've always been able to return your principal plus some level of appreciation. We've grown to just over $2.5 billion worth of assets under management. We're in 28 states throughout the country. So I do have landlords that they're very bullish on California real estate, but I also have investors that want nothing to do with California real estate. So we're in 28 states. We're in tax-friendly states as well. So you're able to take those advantages. And then our average return is just above a 6% cash-on-cash return. And that's net to you as the investor after fees and the DST expenses. So what we offer, a DST is basically just fractional interest in a large institutional asset. With that, you get all the benefits of real estate that you're accustomed to. You get monthly cash flow, you get appreciation on the sale, and you get the depreciation benefits as well. We do a complimentary cost segregation study. Each month, you receive a monthly operating statement. Then at the end of the year, you receive a full comprehensive tax package with the accounting work and the cost segregation study in there. So you could turn over to your CPA and all the accounting's already done, simplifies your taxes for the year. What we do, so Kingsbarn has a full acquisitions team. Our headquarters is based out of Las Vegas, Nevada. There's about 90 employees there. And our acquisition team goes out and we identify real estate. We close on it with our own funds, and then we backfill it with investors through 1031 exchanges or sideline capital like yourselves. Once we fully raise the equity for the DST, Kingsbarn professionally manages it, and then each month you get paid your monthly distribution based on the cash-on-cash return of the investment. This is our executive team. Kingsbarn's led by a gentleman named Jeff Pori. He's our CEO. And then we also have a development arm as well. We pulled over a handful of executives from BlackRock. That's led by a gentleman named Phil Mader. And now I know Greg Burns just went into 1031 exchanges, so I'm going to touch on this briefly. But every one of our DSTs has a legal tax opinion in our document vault, and it's identified as like-kind property. So we've never had a single legal issue with you going from fee simple real estate into the DST and having to pay capital gains tax. And what this does is, again, it gives you access to institutional grade real estate. These are typically properties that, typical mom and pop owners, they don't have access to. They're newer construction, they're corporate backed guaranteed leases. Some of the tenants we've worked with in the past are Amazon, FedEx, Tesla, and then you also have Class A locations as well. So there's strict timelines to complete your 1031 exchange. You have 45 days to ID and then 180 days to close on that property. Well, a lot of times I have investors come to me where they can't go 6 months without receiving any cash flow. A lot of my investors, they rely on that monthly income to cover their expenses. What's valuable with the DST is we can have everything set up while you're in escrow so that once your property closes, the money goes from escrow to Greg Burns, an accommodator, and then to Kingsbarn. That process could happen in as quick as 24 to 48 hours, and you start accruing interest on the DST that day. So if you were to close today, you would get a prorated check the first 10 business days of April, and then you're automatically starting to cash flow again, and you don't have to wait that 6 months. The role of the qualified intermediary, that's the QI, the accommodator. Basically, from this slide is just to get that you want to speak to them early and often and get them involved in the process if you want to do a 1031 exchange. Because as I mentioned, the money goes from escrow to accommodator and then accommodator to Kingsbarn. If for anywhere in that process, the money goes from escrow and touches your bank account, even if you reinvest those proceeds, you're still going to be subject to capital gains tax. So make sure to get Greg involved as early as often as you can. So this is just an example. I have investors come to me and they say, well, why wouldn't I put, they want something safe and secure. Why wouldn't I put it in a treasury or the stock market? Well, this is just a comparison of utilizing a 1031 exchange versus not and paying capital gains tax. Even though our returns are right around a 6%, I'd say in the stock market in a good year, you could get as high as 9%. 6% on $1 million is better, than getting 9% on $500,000. So you're able to, preserve the capital that you work so hard to create in owning real estate for the past 10, 20 years, it's good to just keep deferring the taxes and owning real estate and getting the benefits of that as well through depreciation. So using a Delaware statutory trust in your 1031 exchange, we have a full closing team that works directly with your accommodator and escrow to facilitate the entire process. So we'll handle the nomination language, we'll put the percentages in there, we'll take care of the paperwork, and everything is done for you. There's nothing actively that you have to participate in. So it's a simplified 1031 exchange solution. Every one of our investors has access to our document vault. In there, you'll see all the due diligence items that Kingsbarn used to close on the real estate. So you'll see the appraisal, the zoning report, the phase one, the insurance. And you could give your login and password to your broker like Shant to advise you on it. You could pass it to your attorney. They could review everything. But all that information is already done for you, so you don't have to go out and do all your own due diligence. The benefits to real estate investors like yourselves, it's 100% management free. You're not getting calls worried about, the T's, tenants, toilets, trash, taxes, things of that sort. Everything's handled for you. You could spend time, with grandkids. You could be on a golf course, and each month you're getting a monthly distribution based on your real estate, professionally managed by Kingsbarn. So to invest in a DST, you have to be an accredited investor. Where the SEC identifies that as $1 million net worth. The good news is you're allowed to use the closing statement from your relinquished property for that net worth. And, we never run into an issue typically because California real estate, usually $2 to $5 million is what we're seeing come into our program. So you could utilize that. If for whatever reason you don't meet that, you could have $200,000 annually if you're single, $300,000 if you're married. It's a great tool for estate planning as well. The DST mirrors fee simple real estate as closely as possible. So if God forbid something happens to any of you, all your heirs will still receive a stepped up in basis, and they'll be able to receive the equity tax free when the DST sells. And you could hold the DST in your trust as well. It'll follow the same beneficiary plan, so there's no differences. The DST exit strategy. So a lot of people read online that DSTs are 100% illiquid. That's not true. Kingsbarn being a direct sponsor, we're able to facilitate a 1-for-1 swap with you with another investor. So if for whatever reason an emergency occurs and you need out of the DST and you have $1 million in it, we could replace you with another 1031 exchange investor, but it would just be a dollar for dollar swap. So you would get your $1 million out. They would come in with $1 million. The only thing you would sacrifice is any appreciation because the property didn't sell yet. Our typical hold period is right around 3 to 5 years. We give all our investors 6 months to a year notice before we sell the asset. And then you have 3 options when we sell the DST. You could 1031 exchange into a new DST with us. We facilitate the entire process. You could cash out and pay the taxes, or you could 1031 exchange back into fee simple real estate. You're not married to Kingsbarn or our DST program. So these are just a couple diverse success stories we've had with investors, people sitting just like you right now, wondering what you should do with your real estate. These investors were able to come into our DST program, diversify. So say if you have $1 million, as Greg alluded to, you could put $250,000 across 4 DSTs. Now you have a diversified institutional level portfolio that you're able to cash flow from, and you're hedging risk by being in different states, different asset classes, and different properties. This is just an 8-day case study that we have. As mentioned, we could close in as quick as 24 to 48 hours. So if you're dead set on going fee simple real estate, buying another apartment, but you're coming close to that 45-day ID period and you really haven't found anything, a DST is a great backup option just to guarantee that you don't get stuck paying capital gains tax. You could always, in 3 to 5 years, go back to apartments, say interest rates do come down and you find opportunity. That's a strategy that a lot of our investors use, and we're able to move very quickly to satisfy your exchange. So this is just a quick overview of our current offerings that we have available right now. Typically, we have 3 to 5 available at any given time. The first one is KB Hollywood. This one is in California for our investors that like California. It's corporate-backed guaranteed by Kim Kardashian's company Skims. They just got valued at $5 billion. They plan on going public the end of this year. They just partnered with the NBA and Nike, and they're transitioning more from a women's shapewear to a Lululemon Viore type. This one starts at a 6.5% cash-on-cash return. Kim Kardashian and her company did about $19 million worth of tenants improvements to the location. It's a Class A building. 98% occupied by Skims, the other 2% City National Bank. We've done a handful of Tesla sales and service center. This is a very conservative deal. It's just under a 6% return. 15-year corporate-backed guarantee lease by Tesla, 10th largest company in the world. It has 2% annual increases baked in, and we have 2 of these available right now. The last asset class we're in is Travel Centers of America. This is a new one that's coming out. Our company has done 16 TAs. They've all performed exactly as advertised. We're working with the #1 franchisee, Las Vegas Petroleum. They're all on brand new 20-year leases, 2.5% annual increases. And the big 3 in the industry are Pilots, Loves, and TA. Warren Buffett just bought the last 1/3 share of Pilots. Loves is private. And British Petroleum bought TA 2 years ago for just under $2 billion. So we plan on doing 12 of these this year, 1 a month, and they start at a nice return of right around 8 to 8.25% cash-on-cash return. We do have an acquisition and development fund. If you have sideline capital, you don't want it tied up in real estate, it pays 13.75%. It gets paid out in monthly distributions. It's never missed a single distribution. Myself, along with pretty much every employee at Kingsbarns, invested in it, but it's just another strategy if you're looking to cash flow without having your money tied up for a long period of time. This is a 2-year hold. This is just a recap of what we covered. Some information about myself. That's my partner, Louie, and I look forward to the Q&A and speaking with all of you.
Thank you, Stephen. So now our next guest speaker, we have Ali Talai, founder of Talai Law Offices. Ali focuses on estate planning, business planning, and probate, helping real estate investors and families protect their assets before it's too late. Hello, Ali. Welcome.
Thank you, thank you. Thank you, Mary. Thank you, Shant. Thanks to the team. This is my 3rd time being here, and I'm very excited to be here. And hello to every one of you. I like to put my timer so I could stay within my time. I am Persian, and we kind of don't stick to time sometimes. We come late. We leave late. All right. I'm a trust and estate planning attorney, and I know a lot of the speakers that we had. It's really about building and acquiring properties, and what I get to do a lot of time is try to figure out how do we preserve it. With estate planning, one concept of asset protection is kind of vague. What are we trying to protect? The probate court might be something we would want to protect. If you don't have your basic estate plan, then there are issues when somebody unfortunately passes away. How do you plan for capital gains tax? How do you have a estate plan in place that doesn't take away the step up in basis when unfortunately the person passes away? How do you do planning to make sure you avoid estate taxes? So it's sort of a combination of many different things. But a lot of times I have conversation with apartment owners and real estate investors about asset protection. So if there is a lawsuit filed, what do we do to protect our asset? All the time and energy that we've spent to obtain the properties, buy the properties, what do we do now? So what I like to do in my short period of time up here is to give you the mindset of the plaintiff's attorney. But before I do that, I want to give you the mindset of the real estate investor. That's probably an easier one
for me and for us here together. So if you were going to purchase a property, hang with me. So let's say we find a property that is worth $5 million and we're looking to purchase this property. One of the first questions as real estate investors we would probably want to find out is, what is the cap rate of this property? What's the cap rate of the property? That's usually the first question we ask, right? So if we get a $5 million property and the cap rate is 2%, we're probably not going to be purchasing this property, right? I don't think there would be many hands up saying that they will purchase a property with a cap rate of 2%. That 2%, realistically, it's a formula that you get taking the income, deducting some of the expenses, and then getting a fraction so we could figure out if it's worth it or not. So if you take $5 million and you have a 2% return, that means you're only going to be making $100,000 a year. And that's if you buy the property cash. Most people don't want to do that. Most people are going to go see Javier. Maybe you put like 30% down and you get a 70% loan. That's a loan for $3.5 million. Payment on that would probably be about $20,000 a month. So we're talking about 20 times 12, that's 240,000. So I'm going to buy a building that I only make 100,000, but I have to pay 240,000. So I'm in the negative for $140,000. We wouldn't buy it. If the cap rate was 10%, I am pretty sure everybody here would be willing to purchase a property at a 10% cap rate, right? You and I would talk. You probably would say, let's put a higher offer. Shant, put another $1 million. I buy it for 6, right? We'll get aggressive. They need time. They need 6 months to close. No problem. We'll wait. Now let's talk about the plaintiff's mindset. I have these 2 good friends and we play poker every month. Our families hang out. They are a plaintiff's attorney. I talk to these guys all the time. And I started to think, okay, what do these attorneys that bring these lawsuits, the slip and fall, the habitability claims, discrimination claims, what goes into their mind? These plaintiff's attorney, in most cases, when they do take a case, they get their compensation is a fraction, a percentage of what they collect. So my friends, average a year to 2 years, they spend on a case. They don't get any money. They're not collecting hourly. They spend their time. They pay their employees. And what they want to find out when a client goes to them, they don't just hire the client. In most cases, they want to figure out a few things. You as the investor, the first question you ask is, what is the cap rate? My 2 buddies, they don't ask what the cap rate is. They look, okay, so the first thing they ask, was there an injury? Is there a claim? That's usually the first thing they kind of want to find out. But you don't even really have the plaintiff, they don't even really need to have that good of a claim. If they have some sort of an injury, then the next question they ask, who is the defendant? If it's real estate, they'll search up the real estate. They call me up. Ali, can you search this guy? Tell me how many properties he has. I help them. So they're searching properties. So they find out who the owner is. They want to find out who the owner is. Who owns the apartment building? Is it under their personal name? If it is, why don't we search the person's name to find out if they have other properties? Their mindset is that they don't want to take a case and spend a year or 2 years and get nothing. They don't want to spend a year or 2 and then have to pay $140,000 like my 2% cap rate story. They want to make sure that this is a case that if they spend their time, they're going to be able to get compensated. When I do asset protection planning, and I work with a lot of real estate investors and we do asset protection planning, this is sort of I like to tell them what is their mindset, what is the mindset of the attorney that is filing the lawsuit. So then we could try to put a plan together that make us not collectible, that we don't look like the big target. We want to be a small target. I had a client, she has 18 properties, all under her personal name. She went to her accountant. She said initially she says she has LLCs. So I said, great. She's like, I've been filing tax returns for 18 years for these LLCs. And then she had a lawsuit. One of the units had some sort of water damage. There was a lawsuit filed. And now she's all worried about everything else. We find out that, yes, the accountant has set up an LLC and there's been tax returns that have been filed, but the properties have never been transferred into the LLCs. The properties are still under her name and they're aggressive. They're not going away. A lot of times with asset protection, there's lots of different things I could do. But usually the first step is, how do we get stuff off our name? If you go on the internet now in the next 10 minutes and you search your name, can you find all your properties? That's what the credit attorney is doing. And so a lot of time with asset protection, sometimes it seems simple, but they become very important to make sure you don't own any property under your personal name. We use land trusts sometimes, we use LLCs, we use Wyoming holding LLCs, we use Arizona limited partnerships, we use irrevocable trust, asset protection trust. I could keep telling you the different things that we do, but what I really like to tell my clients that it's not just like one thing that we're going to do. In most cases, a true asset protection plan, it's layered of plannings that we're going to do. We want to make sure you have good insurance. Insurance is like the number one defense for us. It doesn't matter how many LLCs you have. LLCs do not pay for attorney fees. They do not pay claims. So it's really a combination of these things. I am pretty much out of time. But what I do wanted to tell you, I put a book together about 5 months ago, and it's called Asset Protection for Real Estate Investors. Last time I came here, I did bring some books, and I know there were a lot of people that wanted to get a copy of my book. And unfortunately, I still don't have enough I don't have enough printed book. However, I do have a PDF version of this book, and if you're interested to get a copy of it, if you go to my Instagram, I don't have a barcode that you could scan. Mary got the barcode. For me, you got to go to Instagram. If you go to Instagram, and if you go to my law office, TALAI law offices, and if you DM me the word book, I will send you the book, the PDF version of it. I do have about maybe 20 books. Please don't come to me after I get done speaking. After everything is done, I'll promise the few of you that would like to get a copy of my book, I will hand you the books that I have. With that said, I want to thank you. Thank you for the time. I appreciate it, and I look forward to answering your easy questions.
Thanks, Ollie. Some great information. And definitely after the seminar, go see him for a copy of his book. A lot of good information inside. But before I bring up Nadav, our landlord attorney, and before he starts stressing us out about these new 2026 laws, I kind of want to throw some fun again at us. Gato, I need you up here. I've got another lucky table. All right. Let's pick it. Some Home Depot parts. Oh, those maintenance request forms are going to come through because you're going to start implementing them, right? My next lucky table in here. And I want to hear the loudest cheer. Oh, no, those are our staff. That doesn't count. Yeah, hold on. I'm going to pick another one. We're going to go at this again, Gato. Next lucky table in here is 19. Table number 19. Right on. Good job, guys. Please see Sean after, so he's got those Home Depot cards for you. All right, and finally, My last speaker of the day. We will hear from we will hear from someone many landlords in this room know. Nadav Zohar is a partner at Kimball Tyree in St. John and leads the property ownership group in Los Angeles. Nadav specializes in landlord tenant law and works closely with landlords navigating today's complex climate. Come on up, Nadav. How are you? All right, let's do this.
Hello, everybody. Good afternoon. Mary, why am I always the last one to speak? Everyone is full, tired, nobody's going to pay attention, right? I can say whatever I want and. Okay, got it. So, good afternoon. I'm with Kimball Tyree in St. John. We are predominantly an eviction firm, but we provide all services for landlords. And it's fun days. By the way, hi, how's it going? I see here some familiar faces, some clients, some past attendees. Mary emailed me last week, basically asking me to confirm that the brochure that we used 4 or 5 months ago can be used today as well. And typically that would be correct. A lot of the professionals that are speaking here, there's not a lot of changes that are happening in their industry. But for us landlord tenant attorneys and for landlords and property managers, every 3 or 4 months, it's like a lifetime of new laws. So if we use the same brochure as 4 or 5 months ago, I would be giving you bad laws. A lot of them are obsolete and have been renewed, changed, not to your benefit. So I'm gonna touch on a few of those laws. The goal is not to go into every little detail and aspect of the law, but just to give you the bird's eye view of some of the new regulation that everyone needs to face with. But before I jump into this slideshow, do I control the slides? Yeah. Before I jump into that, I just want to bring two recent or relevant issues that we all need to be aware of. Number one, if anybody here has property in LA County, does anyone here have property in LA County? Okay. So there's price gouging laws currently in place. And since COVID, the local legislators basically are very quick on the trigger to impose emergency orders. It started in COVID, which everybody understood, but now 2 days of rain and the governor announces an emergency order, or 3 days of ice raids, and now there's an emergency order in place. Currently, there's still an emergency order in place. The justification is the fires that happened in January 2025 in the Palisades, plus additional, like I said, the 2 or 3 days of heavy rains. And the price gouging law, that when an emergency order is in place, price gouging laws are triggered. So even if your property is not subject to rent control, you cannot increase rent by more than 10% per year. And that also applies to vacancy decontrol. So if you have tenants who vacate, even if they live there for a long time and they're well below market, you cannot adjust the rental rate to market, even if it's way below market. So you cannot increase the rent for the new tenant by more than 10%. That's number one. Number two, just does anybody here have properties in LA City? Yes. So just so you know what happened 2 days ago, city council, who are not very landlord friendly, held a closed session. And in that closed session, they committed legal robbery. What they did is they allocated $180 million towards eviction defense. They allocated $180 million to 3 specific law firms that I consider to be extortionists. In evictions, they are the first law firms to heavily litigate simple cases just to increase the landlord fees to make it unbearable on the landlords, and then to come up and say, oh, we want to settle, give us another 6 months to live there rent-free and pay us for the pleasure. And that's what our city council did in LA City. I'm bringing this up because as a landlord attorney that receives calls a lot during the day, I hear a lot of landlords complain. And I don't hear a lot of landlords that complain, but also do something about it. So I encourage everybody here to participate in local politics. And that means to show up to city council meetings. The photo that you saw that Mary presented on the screen at the beginning with the landlords holding the yellow signs, I took that photo. And our firm, in collaboration with AGLA and another organization named Vibrant LA, we facilitated and collaborated with many landlords to show up and to take over the room. And just to articulate our success, the proposal back then was to change rent control to allow for any rent increase between 0% to 3%, depending on the calculation. The rent increase can never increase 3%, and it can go down as little as 0%. But because of our advocacy, we were able to change that from 0 to 3 to 1% floor and 4% cap. And it may not seem significant when you look at it from the abstract, but at the end of the day, if we have around 600,000 units subject to LARSO in LA City, and instead of increasing it by either 0, you increase it by 1%, or by increasing it 3, you increase it to 4%, that's millions of dollars that landlords are recovering, and that's because of our efforts. So with that said, please, one of the most important things that I can say here today is that we ask that you help, that you participate, that you contribute money towards these efforts. And now we'll go into my presentation, if it's okay with everybody. Okay, legal disclaimer. Okay, lease terms. And again, we're just going to touch up on these things very quickly so that you have more time to ask everybody questions when we start the panel. I don't know how relevant this will be to everybody, but there's a new state law, AB 1414, basically allowing tenants to opt out of certain services that landlords package with tenancies. It can be internet services, cable services. Just know that now it's regulated. If a tenant asks to opt out, you must allow them to opt out. The next new law relates to habitability. Does anybody here sell ovens or refrigerators? 'Cause they're making a lot of money, more than everybody in this room. Now every unit needs to, any residential unit other than single room occupancies and some very limited exceptions, the landlord must provide a refrigerator and oven. And if you don't, or if it's not operable, the unit will be deemed inhabitable as a matter of law. There is a lot of nuances to this. Like I said, I don't think that in this forum or in this context, I should go into the nitty-gritty of things. But at the end of the day, you need to provide those two items, and it's regulated. So if there's anybody here that's not providing it and you need help with that, you can contact us. Okay. SB 610 is another state law, and that was passed because of the recent disasters that we've experienced. What triggered this, I think, was in January 2025, the Palisade fires. It basically says if there's an emergency, if tenants were evacuated because of an emergency and the property suffered damages, the landlord is basically responsible for everything. I don't know why they passed this, because before that you were still responsible for everything anyways. I guess they wanted to add penalties, like they like to do against landlords, but that's the gist of it. And by the way, everything that I'm talking about here has more detail in the pamphlets or the booklets that Mary and Shant prepared for you. And there's even more than what we're discussing here. Next one is SB 655. Anybody here in the air conditioning business? You may want to invest in some air conditioning companies and stocks because it's coming. The bottom line is that soon enough, units are going to need to have air conditioning as well. And the high and low temperatures are going to be regulated. It's not in place yet, but I think that they expect it to be by January 2027. So the legislator basically is looking for recommendations and proposed drafts for this. So yeah, that's going to be something to think about if you buy properties without air conditioning, or how good the units are cooled. Next, residential evictions. Anybody here loves evictions? Yeah. Anybody here filed an eviction before? Okay, I see a lot of victims. Okay, AB 246, Social Security eviction protections. So if a tenant doesn't pay rent and they notify you that it's because their Social Security payment was delayed for whatever reason, guess what? You can't evict them. You need to keep on providing them with housing services. And if you do anything to circumvent that, you'll get sued. And we don't like that. So just pay attention to that if any tenant ever tells you that it's because of their Social Security benefits. That's a great question. What do you think the answer is? I would say indefinitely, but the language of the law is 6 months. Guess what? If 6 months pass and they still don't pay and you try to file an eviction, the $180 million that city council just gave those extortionists are going to be used for that. So there's no way to escape that. Security deposits. Last time when I was here, we spoke about new security deposit laws, which basically requires landlords to document via photos the starting condition of the unit prior to the tenant taking possession, the condition of the unit right before the tenant vacates, and then the condition of the unit after the tenant vacates and the landlord makes the repairs. So it's 3 sets of photos and videos that you must not only maintain in your records, but also send it to the tenants. That was our last seminar. A seminar before that was when the law said you're not allowed to charge more than 1 month security deposit, right? So now there's another law. And the reason why I'm giving you this little history is because it looks to me and to people in the industry that the legislator is trying to discourage landlords from even taking security deposits because it's becoming a burden. Not only that it takes you time to rent a place and you give discounts and you say, oh, we'll give you 75% less on the security deposit. Even that is so highly regulated that it may be a burden, an administrative burden on the landlord to keep security deposits. Not to mention the fact that a lot of landlords don't, in LA City rent control, don't pay security deposit interest to tenants, which is required. And then they use it as a defense against evictions because there's a catch-all provision in the rent stabilization ordinance that says any violation of the ordinance is a defense to an unlawful detainer. So I'm not exaggerating. We have we have a lot of cases where the notice demands $20, $30, $40,000 in unpaid rent, or even $10,000 or $5,000 in unpaid rent, and then we need to dismiss the case because the extortionist landlord say, oh, you didn't pay our tenant $25 in a security deposit interest, so now you need to dismiss the case, pay them the $25, and start over. The new law relating to security deposit that we'll go over today is basically saying, how do you return the actual money? If there's any money left on the security deposit, how do you return it? And this new law, AB 414, basically says, if a tenant paid rent or the security deposit electronically, you must offer them the option to receive the security deposit funds electronically as well, unless it's written in the lease that the security deposit is going to be returned via check or money order or otherwise. The second part of this law is how to handle security deposits when there are multiple adult occupants. So the starting point is that you send them a check and you list all the names of the tenants on one check. Now they're saying the tenants can agree to split it in a certain amount or a certain percentage, plus tell you, wire $200 here, $400 there. They have the right to do that unless you wrote in the lease agreement exactly how to return it. So unless you guys are okay with playing around with electronic funds, I recommend putting in your lease agreement how the security deposit will be returned, because then you don't need to follow this law. Did that make sense? Okay. Okay. Okay, service and court procedures starting January 1st, 2027. This is not a big deal, but it's still more burden on the landlords. When you serve a simple notice to pay rent or quit, starting January 2027, you'll need to take photos of the notice posted with a stamp showing the location, the date, and the time. That's for notices to pay rent or quit. And when we serve the summons and complaint, the process server, the registered process server, will need to do the same when they serve the lawsuit. With that, I think we are done with the new laws. Yes, so if anybody has questions, we'll have here a panel for Q&A, and we can try to answer them.
All right, team, this is my favorite part of this seminar. I'm going to invite all the panelists up here. I'm going to fire off these questions for you. And there's some great questions and some amazing answers, I'm certain. Come on up, guys. Thank you again for all the panelists, not panelists, but speakers, for providing us with some wonderful insight. As we make our way up here, I'm going to start with the first question. As a mom and pop investor, how do I navigate or survive what I feel is a trending push to being forced out of real estate business? For example, rent control, excessive tenant protections, bullying tactics of the county, rent registry, also escalating insurance demand and costs.
I think I can answer that one. It's a great question. You just have to figure out if you're either in or you're out. If you're in, you need to get the knowledge. You have to understand it. Don't try to fight it, and just conform and get educated on all these laws. You're obviously in the right place here. Come to events like this and get educated and continue to run your real estate. But if it's something that you don't want to deal with, then I don't know if this is the business for you anymore. this is where the business is headed. So it's just a decision that you have to personally make and kind of go about it that way.
Yes, and if you are in, there's certainly resources to help you navigate through all of this, indeed. What are the typical fees for DSTs?
This one. Correct.
Yep.
So there's three ways that Kingsbarn makes its money. The first one is a sponsor acquisition fee when we close on the property. It's typically around 5%. Then we take a 1% management fee, which is just 1% of the annualized gross rents. And then there's a 2% disposition fee that's discretionary when we sell the property. We only participate in the appreciation if our investors make money. So we have to return your principal plus some level of appreciation for us to participate in that 2% fee. But all of that is already baked into the offering. So for instance, with the Skims corporate headquarters at 6.5%, that's net to you after all fees. So there's no expenses for coming into our program. There's no expenses throughout the duration. What you see is what you get each month.
Awesome. Is it possible to structure a 1031 into multiple DSTs in a predictable ladder where a gain could be phased over many years? 1031 with 1 million of capital gain into 10 DSTs at 100K each, then expect to exit in 1, 2, 3, or 10 years to limit the annual capital gains.
Of course. So as mentioned, we typically have 3 to 5 offerings available at any given time. What I've had is investors that own, multiple properties and they're slowly selling their real estate in tranches. They're not selling it as a full portfolio. So they'll have different amounts of equity available at each given time. So they'll be able to put from the sale of each property that equity into a DST and defer their capital gains tax. However, the hold period for the asset is still going to be, the full 3 to 5 years. Then when the next property comes, say it's a year later, that 3 to 5 years starts again because it's going to be a different offering at that time.
Okay. Nadav, I have to provide AC, fridge, and stove. What's next? Wi-Fi? Thank you. Greg, 1031. If I am already in a 1031 exchange with tenancy in common, can I switch ownership to an LLC? Can one of the owners drop out of the 1031 exchange without affecting the other owners?
That's kind of a more involved answer. So when you do an exchange, the taxpayer that sells has to be the same taxpayer that buys. An LLC that has more than one member is actually the taxpayer. So there is some tax planning that's involved in it, but I do think you could probably accomplish your goals either through a structure where you kind of drop out of the LLC and or you do like a partnership installment note to redeem the partner out.
Okay. Is it still a good idea to invest in apartments in California? The environment here seems to me pro-tenant, not landlord.
Another great question. I think a lot of it has to do with your outlook and your enthusiasm to own and operate apartments. If you're asking that question, you're probably already on the side that you don't want to deal with this stuff. There's a lot of people that are so excited that are still buying apartments. I think part of the psychology when I look at some of the owners that I've dealt with over the years is somebody new coming into this market. They don't know any different. They see these laws as just these are the laws that we have to deal with this year. Next year we have other laws to deal with. The problem is when you speak to someone that's owned buildings for 20, 30, 40 years, they weren't dealing with 5% of the stuff that we're dealing with now. So I think everything is the outlook. Unfortunately, I'm more of a pessimist. My wife is more of an optimist. She says that I walk in a room, I already have a frown on my face sometimes. I should be in a good mood. And I think a lot of the outlook that you have
Yes.
is going to translate into your investments. So that's a question you have to ask yourself. You're either in or you're out. And if you're in, you should be happy about it and make it happen. But if you're out, then you figure it out. It's not the end of the world.
Right.
It's one way or the other.
On that note, is it now a good time to invest in vacant land here since there will soon be a train going through LA to Vegas? I think just investing in land here, especially with the train going through it, is a good idea. Yes. My tenant's fridge gave out Friday, and I could not maintain it until the following Monday. I got it fixed, but tenant is upset that her food spoiled, asking me to replace it or pay her back. Am I obligated to?
I think that the answer to this is it depends. Let's say that we decide you're not obligated to, but then the tenant goes and sues you in small claims court. If they sue you in small claims court, you're going to need to spend time. You're going to need to have a headache because of it. And the judge is likely going to say, well, it was due to the landlord's negligence. They suffered a damage, and they're going to award them whatever the value of the food or their claim is. So unless it's an unreasonable demand where they start saying, oh, I had Wagyu steaks, like what Shant and Mary serve us here, then I think you should try to resolve it amicably just to avoid the conflict.
Okay. Can I get a copy of the tenant service maintenance request form? Yes, of course, but these are nameless. I'm not sure who has asked this, so if you can just shoot me a text in that hotline, I'd be happy to do it, or send us an email, not a problem. Are there any networking events for local landlords or social media groups? You're at one. I love it. I do want to point out that a lot of people, or not a lot, but a few people came up to me and asked me if we had a membership to pay. We are not an association. We are a realty office. Our office is in Pasadena. We have been in the business for 20 plus years. And because of that, our office is sort of now an informational hub to a lot of our existing clients, new clients, a lot of a lot of landlords reaching out to us through our social media outlets like YouTube channel, texting us through our hotline. And we've become like this informational hub for all of mostly Southern California apartments here. So we'll continue to do this because out of our goodness of our heart, because like I said, strength in numbers, and I want all of us to just be here stronger than ever. So feel free to reach out to us anytime. Yes, there are networking events. There are the AOA, Apartment Owners Association. There is AGLA, AAGLA. They do host events. They do host a lot of webinars just like us. Be on our email list. I'll be sure to send you all the information. So be sure to reach out. Is habitability necessary for insurance? And forgive me if I didn't read that correctly. Please, we're going to pass the mic around after. We can re-ask it. But is habitability insurance necessary?
Is definitely something. It's harder to get, but if you can get it, it's definitely something that I will recommend. So obviously the attorneys here can answer that question. Is habitability important as far as claims when something comes in, as far as a habitability lawsuit? But having habitability coverage not excluded or having a sublimit of habitability is important. And if you can purchase it, if there's an option on the table for you, definitely go towards that option.
Okay. If you just purchased a property and the tenant hires an attorney because they believe the unit isn't fit for living the way it is, now is the new owner, myself, subject to a lawsuit? And they just purchased the property.
I would say yes. You're the owner. They owe you the rent. And if you collect rent for a unit that's not habitable, you're responsible for it. If they are suing you for issues that pre-existed your ownership, you may bring in the prior owner or the seller to the lawsuit to indemnify you or to be a cross-defendant. But generally, there's no such thing as you being a landlord or the owner and not being responsible for the current state of the unit.
Okay. I have a property that is rent control. I want to sell the property. Tenants will not leave. I offered a relocation fee. Tenants want me to give them $120,000 and they will leave. What are my rights? Property is in Los Angeles. Do I need to hire an attorney? I've owned the property for over 75 years. Tenant in the front house is a single lady, 5 years. Tenant in the back house has been there for over 20 years, also a single lady. Rent is very low. I haven't raised the rent for years, which is my big mistake. Now I'm assuming she wants to sell. Maybe the value is not as high because of the low rents.
Unfortunately, if you're a rent-controlled landlord, you cannot force a tenant to leave. You must have cause in order to terminate a tenancy, and selling the property is not just cause. So unless they agree to voluntarily vacate according to a cash for keys or a buyout agreement, you're stuck with them, and you need to find a buyer that will buy it occupied. I'm not, I don't think this is a good fact about what happened to me yesterday, but just yesterday, we finalized a cash for keys. Anybody wants to guess for how much?
20,000?
More,
120,000?
more,
Oh, man.
more, more. This is going to become a meme. No, more. $575,000.
They won the lottery.
It was a tenant who was holding up a construction project. It was a 16 unit. That was the only tenant that remained in possession. It's a landlord that purchased the property in 2019, right before COVID. They wanted to LS the property. They couldn't do it because of COVID laws. During COVID, they started to buy out one tenant at a time, and they were stuck with one tenant, an older lady, with an attorney who took advantage, and that was the price.
The result?
Yeah.
Wow. Javier from Chase. Shant showed some deals at caps of 4.5 to 5.5%. Is it possible to get loans for these deals? How about a higher down payment?
Oh, was it 4.5? The one that we did? Yeah. So the deal that Sean did was at 4.5, and I think we got about 60%, 55, 60% leverage. 0.7 was William more down in the. Yeah. So I mean, look, at the end of the day, I don't really rely too much on cap rates. I'm a cash flow lender, and so most of the time my deals are constrained by the rent on the property. So typical deals, I mean, fairway deals that I look at for purchase, they're usually around 50, 55%. I've seen stuff that I've quoted at 40% loan to value, and then there's stuff that I've been able to accomplish at 70, about 70% loan to value, which is kind of topping off, but it depends on the cash flow of the property. So if the rents are near the top and it's priced within the range, I can do that. So at the end of the day, the question just becomes how much down payment you have to put in.
Okay. Why has there not been more pressure on politicians to fix the broken insurance market? This affects non-landlords too. What can be done to create pressure to bring supply back to California?
So there's a lot of pressure actually on Department of Insurance to let the insurers raise rates, and that's the main problem that we're having is the insurance companies are not allowed to raise rates, so, like the non-admitted companies are raising rates as they like, and the admitted companies like State Farm, Farmers, all the admitted companies who are not allowed to raise rates, so they're not able to um recoup all the
profit.
losses they have for the state, so their rates are very low. So if the rates are allowed, if the Department of Insurance allows the rates to increase, then it will be. So all the pressure is done by the insurance companies.
Okay.
Insurance companies have lobbyists and a lot of money. They can pressure this type of change.
Got it. How are best-in-class operators managing to the margin compression in City of LA RSO short of selling?
Just to understand, how are they making deals work?
Seems like it, yes.
Larger landlords, like for people for rental that decide to stay and own RSO properties, right? Like, what levers do they have short of selling?
It's a great question. It's tough. We were just discussing before the seminar the costs of just owning in LA RSO buildings. evaluating a lot of these properties, we've been seeing some of the utility costs go through the roof, including the sewer. I'm sure you're very aware of. The people I know right now that are owning and operating in the city of Los Angeles are aggressive owners. There are people that are really pulling their sleeves up. They're getting in there. They're negotiating buyouts. They're doing whatever they can to extrapolate value from any corner. They're putting rubs accounts into their units. It's a completely different buyer mentality when you buy something in the city of LA and you want to make money there. We have some units in the city of LA, and we've had days when I walked in and I've seen Mary's face and she's completely deflated. There's absolutely nothing we can do with our units. We don't want to give up because, that's just not in our personality. But at the same time, our tenants want to die there and they don't want to ever move out and they have low rents. So
Yeah.
I don't know exactly how to answer that question. It's a great question, but aside from just getting very aggressive, I don't want to say aggressive with the tenants, but getting into a strategic point where you try to find any and all opportunities to increase value. If there's someone, be a little more tough on them, try to get them out as far as giving cash for keys or whatever you can do in that respect. Building ADUs, if there's something. I know right now in the city of LA, a lot of the buyers, they look at deals purely from an ADU standpoint. Some of the cash that you could get out of these deals is purely from ADU speculation, but the rents are locked in, so it's hard to navigate that.
I think this may be the question this person was trying to ask. What viable 2026 candidates should landlords aim to maybe vote for? For those who want to stay in the business, who want to grow their rental property business. Yeah, I know. I think this one's tough. Yeah, no, go ahead.
I think the word that you probably confused with my bad gubernatorial candidate. So governor.
Oh, governor candidate. Got it.
Bible governor candidate.
Yeah.
Stu is the one that will be
Should we? Right.
fire versus rec control.
Yeah. I haven't done much studying right now on current candidates that are coming up to par, but I think what I'll do is I'll get back to you on that. I promise. I'd love to get some research on it myself as a landlord. It's actually a great question. And talk about what Nadav said. I said a lot of landlords complain, but what do they do about it? I'm one of them. Obviously, there's some candidates. There's elections coming. Have I read about the people? Have I figured it out? Who are my local candidates? Who do I show up at these meetings? The answer to that is no. So I think going after today's seminar, I will be starting to, and what I find, I'll be sure to let you know as well. And the last one is, is there an average discount currently on any of those who go in with an all cash purchase?
Not necessarily. Um, I mean, I don't want to say it's becoming the norm right now, but sellers still have their expectations. Cash obviously gives a certainty of closing, but you still have the obstacles that you have to go through on typical deals. So in some cases, yes, if the numbers are close, cash will give somewhat of an incentive to the seller.
Okay.
But it's not always the case. For instance, if I'm brokering a deal and I know that Javier is going to do the loan and we have a slightly lower offer that's cash, but I know the person that's in the process of the loan, I look at that the same way as cash. I know the deal's going to get done. Obviously, it's an extra variable, but you just have to feel comfortable with who's putting the loan together.
Okay. Other than Zinsco electric panels, what are other panels insurance companies want you to change?
There's a large list of that. If you guys, my contact info is on the brochures. If you email me, I'll give you that exact list of all the requirements with which panels. But some that I remember, Stop Lock, Federal Pacific, Zinsco, Bulldog, Pushmatic type, I Challenger. I don't know if I named that already. Yeah, but if you email me, I'll give you the full list.
Okay.
And if you don't know what kind of panels you guys have, send me a picture of it, and I'll tell you if it's on the list or not.
Awesome. Javier Serna, please let us know about how Chase needs a profit and loss sheet every year when the property is just under $1 million. I'm part of their underwriting.
So yeah, so part of the loan process is, I mean, there's annual reporting requirements, and it's typically for over $1 million loans. So if you're under that threshold, I would imagine you may have to go through it through maybe one or two cycles as you pay down that loan, and then you might fall off that list. But I mean, we do thousands of loans, so we do want to streamline that process. So again, loans under $1 million don't require it, but if you're kind of under that threshold, I could see where you may get that request, you know, for the next, let's say, year or two. But theoretically, per the deed, I mean, we do have language in there where we can require it. We just don't,
Okay.
and that also goes along with property inspections. So I know when volumes were down maybe 2 years ago, and we were kind of just sitting on our desk on our chairs, we were doing appraisals for properties just to keep our appraisers busy as well. So.
Okay. We have 2 Chase loans due in March. Shall we refinance or let it flow with a variable until rate goes down?
It all depends. It all depends. I think a lot of us will tell you every situation is unique to you, and that's where you give me a call, or we correspond through email. And I typically take the approach of asking you questions, kind of figuring out what your horizon is, what your plans are, and then ultimately we tend to get to a point where you answer your own questions, just kind of given those questions. So always available to have that chat. I have it multiple times throughout the week. And sometimes I'm going to tell you, hey, maybe you should refinance. And then there's times where I will tell you there's no need to. So it all depends.
When a serious stoppage occurs causing damage to the unit or other units, how do you convince a tenant that it's their fault, which it is? How many times, and they won't take responsibility?
So normally what our vendors would go out and when they assess the situation, they'll give us a full report. Nowadays is we require our vendors to give us pictures detailed of what they pulled out of the drain or whatever the issue is, if it's a toilet that's broken, and then we push back. Sometimes the tenants will give in, sometimes they won't, but we'll leave it on their account, and they'll either pay it, or when they move out, we'll take it from security.
Okay. Same question. If a tenant doesn't report the leaks, which then leads to mold, what do I do? That sort of goes back to the tenant maintenance request forms.
So we encounter that. We do annual inspections,
Mm.
and sometimes we do biannual inspections, depending on how bad if we discover a building is bad, tenants are bad, we'll try to set up to re-inspect that building again 8 months later, just to make sure that there's no issues. Um, we have encountered an issue where there was mold. They didn't say anything. We did our annual inspection, and they proceeded to tell us, "Oh, it's been like that for 6 months." So we cleaned it up, and then we would just periodically check on this unit to make sure. And that's about the best we can do, is just keep on top of them. And we've laid out threats where they're going to be evicted or charged for it. I'd say about 90% of the time it works, and there's a small 10% that we keep visiting the same tenants over, and we try to get them out, but it depends on the current laws.
Okay. My tenant is under Section 8 housing program. They do annual inspections. As a landlord, do I have to do an annual inspection as well?
So we do a lot of Section 8. So there's an anniversary date where they do the yearly inspection. So 60 days prior to the anniversary, we'll do a walkthrough of the unit. And if you've done a Section 8 inspection, you should have a form that tells you what they look for. So we basically go off of their last year's inspection sheet and make sure the unit is up to date and up to snuff before the inspection.
Another personal story I'd like to share. If you are going to do your annual inspections in Section 8 tenants, don't do it close to the anniversary of Section 8's annual inspections. This just happened to us 2 weeks ago. We had a tenant, and I saw that her Section 8 inspection is coming up, so I decided to knock on her door. I walked in and I said, "Oh, hello. I see that your Section 8 inspection is coming up next week. I wanted to pop in here. Is there anything in here that you haven't told me about? Anything that I can fix?" And she told me, she's like, "Yeah, there's a little leaky faucet here, my shower door." And she listed about 4 or 5 things. I said, "Not a problem, unit number 6. Give me about a few days. I'll come out and see you." Now, some of the stuff that she listed weren't urgent. Then the Section 810 inspection came through. And sure enough, she listed all the things that were wrong that she told me, also told the Section 8 inspector, and we got a Section 8 inspection fail notice. So now I have to go ahead and complete all of what was that she told me, which I had plans on doing. She ended up telling also the inspector. Now I've got a fail notice. I was going to do it anyways, but it just so happened to be done so closely to the anniversary of her annual Section 8. So my advice is space it out. Give yourself a good 3 to 4 months to fix whatever they need to fix, and then have the Section 8 tenant inspection go through. My tenant asked me to replace new window curtain. Is my responsibility replace it for them, or can they do it and I can charge them for their own expense? I can charge them directly. Looks like a window curtain.
Well, we've had them where they damage it, we replace it and charge them for it. It's up to you if you want them to replace it. I don't recommend that because they may not put something similar, or they'll hire somebody that's not licensed or doesn't know what they're doing and could damage, installing it damage something else. It's
Right.
happened. So
Okay. So rent control registration is around 350. I think it varies across different cities. Gosh, if you pay a day late, the fines are insane. I have here about $1,000. How could this be legal? This is true. It does say in red print in bold, if you are 1 day late and if it's not postmarked on the day you pay, you will be fined, and it is actually even over $1,000. I think it's just their way of making sure everyone pays on time so they can get a big influx of payments coming through all at once. So definitely be on top of it. I usually have it calendared. I don't miss a beat. I do also pass the 50% of the cost to my tenants. Now, if you pay late, I don't think you should pass the 50% of the cost of the fees and the fines to them, but certainly you can pass 50% of that cost over to your tenants, and be sure to do that. My rental property insurance is expiring soon, and my current insurance company will not renew it. Can you recommend one that can provide insurance for a multifamily property with multiple owners?
Um, so multiple owners is fine. You can have multiple owners own one property, and we can insure it. And as far as insuring it, yes, we can. Um, there hasn't been a property that I couldn't insure.
There you go. Awesome. And how can you identify which ones are non-admitted and which ones are admitted?
So the obviously the agent's supposed to tell you on their proposal if they're presenting you an admitted policy or a non-admitted policy. But if you don't, if the agent doesn't provide you with that information, or let's say you have a policy, you want to know if it's admitted or not, Department of Insurance has the list of all the admitted carriers in California and the non-admitted carriers that have reviewed also in California listed on their website.
All right. How do we pass the repair costs to the tenants for the property located in unincorporated LA? What is the best way to distribute the cost? How can I pass the cost over to them?
Uh, it depends. I mean, you can't just pass a repair cost to a tenant. It's the landlord's responsibility to make repairs. If you believe that the tenant is the reason why the repair is needed, if they caused intentional damage, then you can send them a demand letter, add it to their ledger, or sue them in small claims court. But there's no way to take the cost of the repair, amortize it, and add it to the rent.
Okay. We put a house on a sale, and the tenants are very hostile to the prospective buyers. He literally pushed them off the property, even though the prospective buyers are only walking outside and not invading his space. We did not arrange the walkthrough because they are obviously causing issues and seeing a for sale sign on the property. The tenants are aware that we are selling the property.
So here, the landlord is in a tough spot because on one end they want to sell the property. On the other end, the only way to enforce against this type of behavior is to go into an eviction that's going to cost money and going to prolong the process. The only way for you to deal with this really is to serve a notice and to threaten them with an eviction. But I don't know if that's going to um, achieve the ultimate goal of not needing to deal with the property and selling it. An eviction can take 6 months or more. Then during the eviction, you cannot collect rent. So you have only bad choices here.
Okay. About how much does it cost to place a 5-unit apartment in an LLC? Is it worth doing it if you have good tenants who wouldn't sue you? What are the main benefits in having your property under an LLC?
That's a question I get a lot of time as far as, do I put the property inside the LLC or not? The reality of it is the LLC is not going to help you for that particular property. This hotel here, I'm assuming it's owned under some sort of an entity. Somebody falls in here, the owner is always responsible. It doesn't matter if it's owned by an LLC, a Cook Island LLC, an offshore LLC. So the LLC is not there to protect this particular property. Our first line of defense is the liability insurance, is the umbrella policy. What happens is when a lawsuit comes, the tenant sues the owner. Who's the owner? The LLC. All right. So then what the next thing they would want to do is they want to somehow get the owner involved too. And in most of the cases, they're able to do that. They'll say you were managing the property, so you're responsible. They want to personally sue the owner. Why? Because now they could go after the other property and their home and their investment account. And that's where the LLCs come into place. The LLC could shelter whatever liability we have inside of this LLC. And if they want to go after my other properties, it's going to be a lot harder to get to it. The goal with asset protection is there's really nothing out there that would 100% protect you. That doesn't exist. The goal is to make it harder and harder and harder for a creditor to be able to record a lien on your property. And that's realistically when LLCs come in play.
Okay. And cost-wise, are they looking at?
Oh, that part of it, huh? They range from a few $1,000s. I have sometimes clients that come to me, like the one that I told you with 18 properties. Her accountant set up all the LLCs. With asset protection, it's not getting the articles of organization that matters. I could get you an article of organization in about 2 minutes right now. That's how long it'll take. It's really the content, the operating agreements, and the provisions within it. I would say probably about 3,000 at a minimum to have an LLC that it's fully functioning and it has all the operating agreements and all the right things in there.
And there are annual fees that go with it.
Yeah,
which
so
is
that's the initial investment, and then you pay California, and then a lot of times we do like Wyoming LLCs to hold them, and then sometimes people think, well, Wyoming only charges $62. Why don't I just get all Wyomings or Delaware? California says if you operate an entity in California, and if it's not a California LLC, you still have to register it. So if we do get a Wyoming LLC, it's not because we're trying to not pay the $800. It's really just for privacy planning and added asset protection. Realistically, if you have a Wyoming LLC, you pay the $62 to Secretary of State of Wyoming. You pay about $100 for agent of service, and then you pay your $800 here. So those are all fair play. They are tax deductible, so that's there.
AB 628 is cooktop only. No oven meets the working stove requirements.
That's a good question. Unfortunately, the law doesn't address that. I would say no. I think that an oven, in addition to the uh, to the counter
To
the
cooked up.
cooktop, is necessary.
Okay. SB 655. If unit has only window AC, must every room in the unit have a window AC?
It's yet to be determined. It's not a law that's in effect right now, and there are proposals to be voted on by January 2027.
Okay. Regarding the LA County price gouging law, if I update a unit from 1970s with a 50K renovation, am I safe to bring it up to market for new tenant? AB 1482 property is in Glendora.
Okay, so I responded this morning to a client on this specific question. Let me read to you exactly what I said. 1 second.
You sure it's not the same client?
So the property is located in AB 1482. I'm assuming it's vacant. You did 50K renovations to it, and am I safe to bring it up to market rent for a new tenant now?
Okay, so the situation is this. We have a tenant who vacates the premises, and they were below market. The landlord now wants a new tenant, and obviously, like common sense dictates, you want to get as much rent as possible from that new tenant, or at least the market rate. The problem with price gouging is that it controls also when a tenant vacates and a new tenant comes in. So Penal Code 396, which is the price gouging law, it says, after it says you cannot increase rent by more than 10%, and it says, however, a greater rental price increase is not unlawful if the landlord can prove that the increase is directly attributed to additional costs for repairs or additions that are beyond normal maintenance that were amortized over the rental term that cause the rent to be increased greater than 10%. And it goes on, but that was the gist of it. So if you invest in the unit, $50,000 seems a lot, but if you have the documents to support it, and a tenant wants a 12-month lease, you take the 50K or whatever portion of the 50K that's not just the normal repairs that you do to turn around a unit. You divide it by 12, and that's the additional increase that you can do to the new rental rate beyond the 10%.
Okay. This is for Nadav, and I think this is a trick question, so you have to answer wisely. Nadav, do you represent only landlords or do you also represent tenants? Dun dun dun.
I represent only landlords,
There you
but I have a landlord who's renting a house for, anybody wants to guess how much? $85,000 a month. They were relocated from Malibu because of the fires, and their landlord is engaging in price gouging. So my client said, Nadav, you need to help me out here. So no, we don't represent tenants. We only represent landlords. But I do get the tenant's point of view every so often, just like right now when a good client of ours is having a problem because of their own landlord.
Okay. Good question. Good answer, Nadav. Are refrigerators required for month-to-month agreements that are already in place? How does it work when the tenant has their own and does not want to replace it? Do you have to provide new or can it be used? If there, for first is, how does it work when the tenant has their own and do I have to replace it if that breaks?
So the first part of the question was about being month to month.
Yeah.
And the law basically says that anytime a tenancy is extended or renewed, that's when this law is triggered. The problem is that it's extended or renewed once you give a rent increase. So it's not going to be that the law is going to trigger at some point because every landlord gives a rent increase. My opinion is don't try to save on a refrigerator. You know that you need to provide refrigerators. Reach out to the tenant and provide that refrigerator. Now, if the tenant already has a refrigerator and says, landlord, I don't want a refrigerator, you can have them sign a document that says they have their own refrigerator. They're responsible for it. They'll take it with them when they're out of the unit. And when they do want a refrigerator, they will let you know. And then you'll have 30 days to provide it. If they don't want to sign it, then you can just send them a letter basically formalizing or memorializing the exchange that you had on the topic.
Does it have to be new? Can I
That it does not have to be new. No.
Okay. If it's their fault that it's broken, do I have to replace it? Also, currently a month-to-month agreement.
So I would say that you always want to conduct the repair, to make the repair, to replace whatever needs to be replaced, and then you can hold them responsible. Because at the end of the day, if there is no working refrigerator, per code, the unit is inhabitable. Why was it inhabitable? It's because of the tenant. We know that. But you don't want that to be the starting point when you expect rent to be paid and you expect to be able to evict for non-payment of rent if the tenant defaults.
Okay. Do refrigerators and stoves need to be new? That's another question. No. No, they do not. Next question is, do tenants need to prove or show proof of somehow they're not or receiving Social Security? Is that something that I can ask for?
So the law doesn't address that, but if a tenant is not paying rent because of a delay in Social Security, which I think is a very rare occurrence. I'm just curious, did this ever happen to anyone? I never heard of anybody experiencing that. So I think that if a tenant is not paying rent because of it, at the very minimum, you should request some documentation in support of this in writing. And then if they don't provide it, then you have two options. You either give them more time or you take a more aggressive approach and you file an eviction and allow them to use that as a defense, or you can propound discovery and ask them for those documents.
Okay. Security deposits. So I have 0 move-in photos for a long-term tenant. It's been 10 years ago.
Yes, this new law came into effect, I think, with the photos, it was around June 2025. It may have been a little bit earlier, but definitely if it was 10 years ago, you were not obligated to have photos from 10 years ago.
Okay, so no. Is the principal guaranteed on the DSTs? Is the principal guaranteed on DSTs?
At the end of the day, it's a real estate investment, so it's only as strong as the lease that's in place. Kingsbarn doesn't guarantee it, but that's why we hedge the risk by working with companies such as, Tesla, FedEx, Ryerson, Amazon, where there's a corporate-backed guarantee, and they're the ones that are guaranteeing the lease for you. So the DST is only as strong as the lease that's in place.
Okay. This, I'm assuming, the handwriting is a little off, but I think it's saying do any functional stoves, are ovens required for functional stoves?
It needs to be functional.
Yes.
Yeah. And
More.
and I forgot also to comment, somebody asked a very good question about who should we vote for. So the primaries are in June. Is it okay that
Yes, please.
the
And-
primaries are in June, and we are going to publish a full list of who you should vote for.
Perfect.
That includes judges, um, district attorneys, council members.
Excellent.
So I urge everybody to know who they are voting for. When I started voting, I voted by the last name. If I like the last name, I voted for it. If it felt like it's somebody that may have the same opinions as me, I voted for it. I found with my experience and going to city council meetings that last last names, they mean nothing. So we will have a list. Does anybody here live in LA City, by the way? Live? Okay. Yes? Okay. There are the odd districts in LA City are up for elections, and we're fighting in every one of those districts. But regardless, Mary, I will provide you with
That would be
with that
amazing.
list, and you can distribute it, and you guys can forward it to your relatives, to your colleagues, to anybody that can vote, and that's how we will make a difference.
Thank you, Nagar. That's Susie and Liz to my question over there. Does the refrigerator law apply to existing tenants? Does the owner need to buy or replace the broken refrigerator? They've been there for years.
Yes, so the law is triggered once a tenancy is renewed or extended, and that happens when you either sign a new month-to-month lease or sign an extension, or if you give a rent increase notice. In my opinion, you should pursue making sure that every one of your units has a working refrigerator and an oven as soon as possible.
Awesome. What is the minimal insurance coverage that the bank requires? Can the California Fair Plan be enough?
Well, every bank's different requirements, but if the bank's okay with a basic fire policy, then yes, it could be enough. But if it's a commercial loan, most likely not.
Okay. Maybe I missed this, but is there a restriction on setting new rent on a vacant unit? I'm assuming the unit is vacant, it'll go up to market rent, but are there any restrictions because of it?
Can you repeat the
Yeah.
question?
Maybe I missed it, but is there a restriction on setting new rent on a vacant unit?
So the only restriction that I'm aware of currently is a temporary restriction that is the price gouging laws. They basically are also in effect when a tenant vacates, and every end of the month, the Board of Supervisors of LA County, another group of people that I have very little respect for. I really encourage everybody to look to view those board of supervisor meetings. There's live streams. It's frightening to think that they control our lives, but every end of the month they vote on extending it, and since January 2025, they voted yes. Every 30 days they need to vote on it again. So currently the price gouging laws are set to expire. I believe it's March 27. So before that they will need to vote to extend it, and that's probably going to happen.
Are you able to attend this voting process as a landlord? Can you go up there and
Yes, so the photo that Mary showed on the screen at the very beginning, do we have that photo?
Yes. I don't know
Uh,
if it's available.
yeah, that was a photo that was taken in the city, in LA City Council meeting. It's open to the public, and you can view it on a live stream. We were there early. The meeting started at 10 a.m. and our group was standing in line at 6 a.m. They only allowed 100 people in, so it was, for the most part, it was landlords, as you can see in the room, and it was one of the first times that landlords dominated the hall. However, what was funny about it, if you see on the right side of the screen, you see windows. That's to the street. There were thousands of tenant advocates protesting and vocalizing their thoughts, and you could hear it from inside, um, saying no rent increases and also no rent. They start with low rent increase, then they say no rent increase, and then they turn it to no rent. So be ready for no rent.
What about the laws of discrimination on Section 8? Do I have to take a Section 8 tenant? Any other radical problems do I have to accept an application without my choice?
So another crazy idea by the California legislator is discrimination based on source of income, which means you cannot say I don't take Section 8 unless you want to be sued. And that's a very common lawsuit nowadays. My father-in-law, who's a landlord, just sent me an article yesterday in the LA Times about a tenant and her attorney who sued over 35 landlords just in the past 6 months. They call and they say, hey, do you accept Section 8? If you say anything other than yes, you're going to be sued. So if you're, for example, if you have a broker who takes the call and they say, oh, let me ask the owner. Even if the owner would ultimately say yes, that's a lawsuit. So be very, very careful with what you say over the phone, let alone in writing. But nowadays we're seeing more and more lawsuits. It's a huge revenue source for our firm. We shouldn't be complaining about it. But at the end of the day, our clients are being abused on all fronts. So yes, you need to accept Section 8, or you cannot reject a Section 8 applicant just because they are Section 8.
Okay. All right, landlords, let's practice this. I'm calling you. I'm going to ask you a question. You're going to answer it. Do you accept Section 8? All right. Can I get a copy? Oh, this one I already asked. Okay. We are nearing almost our time, everybody. I'm going to try to get through these fast, but if I don't answer it for you, please come up to us at the end. We'll be kind of lingering around over there. Other than, if not, reach out to them. Their direct contact information is in the back of the booklet, okay? Just building brand new in the back. Landlord living in the front house. Any special screening process? Saying no to Section 8? Nationality, etc. So I'm assuming you're building a brand new building in the back, which is an ADO, and then there's a then the landlord is living in the front house. Any special screening processes for the back? You just go through your regular screening process, and the answer to not accepting Section 8 is, you know the answer to that. Yes. And you cannot discriminate on nationality. If you are a Oh, habitability is necessary. Okay. Mm-mm-mm. Okay, let's see. DST income. Is there any advantage in an exchange? For 1 million property, is DST monthly comparable to the rent that you would get?
A lot of times our investors see an increase in their cash flow, transitioning from fee simple real estate into the DST. It also gives them the ability to diversify so they could go into multiple different offerings. But right now, our cash on cash return, as seen in the slides, is right around 6.25%. So a lot of times they are performing better than some, apartment buildings that have under market rents.
Okay. The security deposit was years ago. It was only $1,000. Now the rent had increased to $2,300. Can I ask my tenant to pay me more to cover 1 month's rent at least?
There are limited exceptions to the type of landlords that can ask for more than 1 month security deposit. It's spelled out in the code. Whoever asks that, you guys can email me or Mary, and we'll give you the specific answer.
What do I need to do if the tenant's complaining? The son keeps getting sick and he thinks it's because of mold, but there is no visible mold in the room. They got a kit for mold and they said it shows mold. What can I do?
We've had this situation where we've had the unit tested professionally. It'd come out, take samples, and it was deemed not to be mold issue.
Okay. To hire a professional company to do it for you is the first step. If the tenant wants to change the floors or the cabinets on his own, what should I do?
Say no.
Okay. Even if they want to pay for it themselves?
That opens up. I mean, you could do it if you want, but I don't recommend it because it's, first of all, they'll put in what they want. If it's how would they install it by a professional? If it's not installed by a professional licensed person, insured person, you'd never know. And then It's just we've had it where we've taken a building over that our client did allow them to do it, and we had to go in 2 years later because it was done so bad, and we had to replace it. So it ended up costing the landlord twice.
So the answer is
No.
no. Okay. I have a building in Azusa that, and this is the last two questions, by the way. I have a building in Azusa that shares a driveway entrance to a building we don't own. There is always an issue with the tenants that don't belong to us. Large items dumping, and we get the notices and we get the fines. How can I resolve this? Cameras get vandalized. The city won't stop because we face the street. We also mentioned it's not us. So they share a driveway. It's not their issue. But they're the ones that keep getting fined, and they're the ones that just keep getting all the grunt for
You
it.
tried to talk to the neighbor, the other property owner, to see if they could help out. You have?
They're losing that. It's honestly the way it's situated. It has appeasement. We own the building on the right and the left, and then the back doesn't belong to us. So they just have an entrance. But because we case the street, we get the fines. I just got one today again. It's $300-400 each time, and has expressed to the city that it's not us, and it's constant. And I don't know at this point what to.
There may be an easement between the two properties.
There should
Oh,
be.
you said there is? Oh, I'm sorry.
Then the dumping is on my side because we face the street. So the dumping that the tenants in the back are doing is like right there. What are this stuff?
So we have at our firm we have a dedicated department that deals with dispute between adjacent property owners. I don't have hands-on experience on this issue, but you can take my card and I can put you in touch with someone that can help you.
The cameras get vandalized.
Yeah, I think it's time to contact someone on a different level and make some notices go out. Yeah. Mr. Ali Talai, if I transfer my LLC to Wyoming, how it affects the loan on the property? Is the lender going to be okay with that?
That's a depends kind of a question. And when you say if I transfer my LLC to a Wyoming LLC, that doesn't make a whole lot of sense either. You could have an LLC that the property might be in there, and that might be a California LLC. You may create another LLC and then deed the property, do a quitclaim deed or grant deed, transfer the property into this new LLC. As far as how the lender is going to think about it, it would really depend on the lender. If it's a commercial property, in most cases, they're fine with it. I mean, if they already gave you the loan under an LLC, they probably don't have any issues. If it's a 1 to 4 unit, those are the ones that a lot of times these residential lenders, they don't do loans under an LLC. So a lot of times investors purchase the property, they obtain the loan under their personal names, and then sometime after they transfer the property into an LLC. But the reality of it, it doesn't make a whole lot of sense to transfer a property from a California to Wyoming. California law will rule on wherever, if the property is in California, California law applies. It doesn't matter if it's in a Wyoming LLC or Cook Island LLC or California LLC. So that part of it doesn't make sense. What we do sometimes is that we create the Wyoming LLC to serve as a holding LLC. So now you got the property in the initial LLC. You don't own the California LLC. Your ownership is inside this Wyoming LLC. And then that Wyoming LLC is owned by your trust. And so the Wyoming LLC is really there to create more friction, make it more difficult, provide privacy. So if we're adding the Wyoming, we're not taking away the California one.
I'll throw one more in there because it's a quick one. Are landlords liable for flaky paint after tenant has been in there for more than 10 years? Yes. Nadav just said yes. 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 Forgive me again, we have reached capacity. I didn't realize we'd have such wonderful questions that came up. Feel free, Andrew, one quick question from him.
Could you add any color or guidance on future policy changes to measure ULA eviction tax?
Like, when underwriting for sale and disposition, the 4 to 5.5% on gross sale proceeds shakes out to be about 20 to 30% of net profit. So it's quite impactful. And then all up to that is in the current landscape, what are the best, most practical methods for mitigating that sales tax that you would have to pay?
The mansion tax, yep,
Good old mansion tax. That's
which has failed miserably from what I understand,
yeah,
right?
they've lost revenue on it.
Yeah.
But I don't know how you could get around it. Off the cuff, I know people that have listed portfolios for sale. Let's say the aggregate value is $20 million and one building is worth $6.5 million, one is worth $3.5 million, one is a little bit, the numbers are off. So anything over $5 million, you get taxed. The transfer tax is 4%. So it's a $200,000 transfer tax right off the top to help with the homelessness in California. People are adjusting sales prices. I am seeing that, but I don't really know, Andrew, a way around it, or how to. The only thing that I would hope for is if they do the study on that tax and they see that the tax is actually losing revenue for them, maybe at some point they would reverse the tax. I don't know if that's realistic or not, but they are losing revenue from it. There's less transactions happening, so their overall revenue is less with that tax in place. But city of LA, it's tough. Even if you exchange, they take the 4% right off the top. So it has nothing to do with the 1031 exchange either.
Thank you, Sean. Thank you all so much. Again, please come see us after. We'll sort of be hanging out. If there's a question that you really need answered, feel free to pull us aside. I really appreciate you staying till the end. Amazing information that was covered. Thank you, thank you, thank you.